Almost. Sorry guys, I'm taking a little time, but I'm posting several places, so almost should be ready. Okay, tweet about it. Okay, so YouTube should be this. Excuse me. YouTube should be live. Twitter should be live, and about to start the Discord. Okay, Discord is also should be live. Okay, let me chat everybody. Everyone. Okay. Okay. So just let me make sure sound not staticking. Okay. Welcome everybody. Welcome to Top Trading Edge. Start with a disclaimer. This video is for education purpose only and not recommending to buy or sell any sort of stock or investment. For your financial advice, please consult with your professional financial advisor and make sure you guys do your due diligence before you enter into any trade. It could be very risky. You could lose your entire portfolio. It's very risky, guys, because market is like that. Market always have a bear and bull sides, and we need to take a look at that. Very important. So welcome everybody. Those who are new here, welcome. We are also live on YouTube as well as on Twitter. So if you do not know, those who are on Twitter, they can click on my profile. There's a link there, and just to show you, I'm going to take a 2 minutes, everybody who's joining, and then we'll start rolling. So if you click on profile right there, and you can see here, these are the links, but this is the link right I'm talking about right on the top. That's my profile link. If you click here, it will take you to Discord, Twitter, YouTube links right here. These are the links where you can join the community right here. Okay, YouTube links are also there. So this is how you can always join whenever I'm live. Normally we are live on a Sunday 7 p.m. but today, we had a long weekend, so instead of Sunday, we market prep we are doing today, which is Monday. And we are also live Monday to Friday, market hours, morning 9:30 Eastern time, always Eastern time, morning 9:30. Sometime I go until 6-7 o'clock, right? So always live streaming. You can see my screens, and I share my screens during the live trade. So those who are new here, welcome everybody. Okay, so right there. And those who are right now on a Twitter, if you can retweet, guys, I would highly appreciate. Retweet, like, and we can rock and roll. So people must be interested today what exactly just is happening in the market. So I want to take a look at the we'll start with the market first. So let's start with the S&P 500 and see what S&P 500 is exactly right now doing. So as we discussed last time, those who are in the trading session, that we did test the 381 S&P 500. Why we are taking the S&P 500? This is the market. So anytime I talk, first I always talk about the market condition, because every time I talk is market first and then your stock, then any of your stock is second. If the market goes south, your stock can be vulnerable. Why? Because market has a more strength than your stock. So that's why I always tell everybody that market has a cycle. You see this, bear cycle, bull cycle, bear cycle, bull cycle, bear cycle, bull, right? So all these cycle we have to go through different several of cycles, which are weekly cycles, monthly cycles, and also daily cycles also. And intraday, when we do day trading, scalping, there is a intraday also. There are different kinds of cycles. So that is the only reason I tell everybody, because everybody over here as a community, everybody is different, right? When we play sports, defender is different, right? The quarterback is different, then the offender is different. So everybody's strength is different. So we can, what I teach here is, we cannot play as a defender or as a offender all everything together, because it's very difficult, very risky. So you need to identify your strength. Whatever your strength is, based on that you're supposed to play, whether you want to like scalping intraday, or you like to hold overnight, or you want to play weekly, you want to play monthly, or you want to play probably a little bit longer, maybe yearly also. Some people do play a little bit long also, right? So that's what we need to understand ourselves. Everybody individual need to understand, because that same trade one person can make, other person cannot make in the same trade, because of the timing in and out, right? All right, so these are the cycle S&P 500. What happened here? So as you can see, we had a 1.5 month sell off right here, bear cycle started right here, right? So every time what I do is, these are all the waves I create. Based on the waves we go by. These are bearish wave, bullish wave, bearish wave, then again bullish wave, then again started the bearish wave, then consolidated in the middle, and then we have the bullish wave, right? So what are these? Basically, you can see our yellow line I draw on the top. Those are called tops falling. Tops are falling. So whenever you see the tops are falling, that is called sellers are heavier. Sellers are selling because seller has a more power than the bulls are. So as you can, this is the cycles how we are right now analyzing. So what exactly happening right now? We found the bottom here, but did you notice that this bounce, when we bounce, I don't see any support pretty much well. If you ask me, the way I look at this support has a wick below the body. You see this wick below the body? Those are, I would not call like rising bottom. Whenever the rising bottoms are, you need a stronger support, like you need a strong support like this, and then go like that. You follow? So those are the technical analysis. So right now what I notice here, these are not a strong support. So right now this is only, I'm talking about technical, guys, okay? Remember, technicals, what I discuss here is technicals, financials, then I also discuss physics of finance also, because they are two different things. Then I also talk about geopolicy, and geopolicy can overrule technicals as well as foundation of financial. That's what we have to keep it in mind, remember, because that's where the bigger rules can play. So where are we at this particular point of time? As you can see, what is this? What is this? This is a downward channel. Excuse me. This is the downward channel, as you can see right here, all the channels. So this is the resistance right here, this line is, and this line is the support line right here, right? So every time we try to test and bounce, but what we are doing here is lower high, lower low, lower high, lower low, lower high, lower low. Now we are going upwards, okay? So when we break the channels, you see that whenever we break the trend line, we have to be very alert. As long as you can see right here, we did not break the channel, we got rejected from the channel and we went down. Same thing here, but this time we broke, and the moment we broke, I announced that, hey, we are consolidating here at a 400 area, which is very critical area, and we have to 80% position, we have to take it out of the short position, because these are the bear market. But some people don't want to listen, and they just want to think they think market gonna tank. Yes, market can tank, but market cannot keep tanking on your time. Timing is everything. And that's what I would like to teach you here, that sorry timing is everything, right, guys? Because as long as you have the time, then yes, you'll be fine, because most of the people, they are playing options, or when you play options, you are holding a melting ice cube, and ice cube is like, when the market goes upward, you are on a hot fire burner, and ice cube can melt faster, guys. You follow? So that's why I like to teach everybody very careful when you want to be a long or short, particularly when the directions are about to change, when you are bottoming out or when you are on the topping out, right? That's the very important sign. Most of the people lose money when they just become all-time bullish or they become all-time bearish. I do not teach here that we can be all-time bullish and all-time bearish. The market cannot go one way. It always goes up and down, and you need to be part how you are trading. Particularly options are dangerous when these are the bulls and bear cycle rides, just like a roller coaster ride goes through, right? So that's why we got to be very careful. As you can see, we broke the trend line. We announced in the room, say, hey, this trend line is solid and is gonna, is breaking out and it look like a bearish, but we need a more and more confirmation. As you can see, one candle stacking on each other, right? And if you look at that, this last candle right here, you see this last candle is also, there is no wick above the head. You follow? So whenever you see this kind of no wick above the head, you can see that no wick above the head, that's the very bullish sign, guys. Okay, that's super duper bullish sign on that, right? Now one thing I want to show you, 1 2 3. So whenever you see these three stacking candles, I mean, if you know technicals, these are W pattern forming, and whenever the three green candles are called white shoulders, so those are the white shoulders are strong bullish sign. And we also announced that, hey, this is before Friday, what did I say here? If the candle close Friday, because I tweeted this chart on Thursday, if the candle close about this, the neckline right here, neckline is the W neckline right here, neckline resistance, market can finish W pattern. So we are right now heading, look at that, market close on Friday above the neckline, and we broke this resistance, which is 411, and everybody was bullish, and we are heading to the resistance, which is $430. Now, does that mean Josh is gonna go tomorrow? No. Okay, that we know, but Josh doesn't know. Just to let you know, okay, Josh does not know it's gonna happen tomorrow, but right now the trend has changed, and these are the trend. Every time the trend breaks, it always goes to the linear line. Remember, that's how the linear line now actually get tested. So this is the resistance, is around 430, and that's where market, I think, is according to me heading. But that, what does it mean? Josh, should I go and buy on tomorrow market opens up and be bullish? Nope, that's not what I teach here. Okay, what we do is let the market maker go first, because market maker has to go first, and if they are going bullish, just like how every time I tell, let the market decide. I would not mind let the market go a couple of dollars up, and then I would enter. I care about 20%, 30%, 40%. I don't care about to get slaughtered, because market can fake out, right? That's why we need confirmation. That's why we when the market opens up, we go through and analyze it. So as you can see, W pattern is forming, and market is right now pretty much heading in here. So what do you think, Josh? 430 is the resistance, that's it, and market gonna go down? No, what I teach here is technicals. Remember technicals, guys. What are the technicals that says every time you're hitting a resistance, you clear your position. Every time your support is, you have to make sure what are the positions. Support need to break or support need to bounce, right? Same thing resistance. If resistance poke through and it candle close above, then you can be more bullish. If the candle get rejected, it can drop, right? That's what happens. So what you want is, you want at the resistance, you don't need your position. Just like look at the here, resistance trying to break and then got rejected. Next day market open up, gap down, and bang, right here, you see this? So something like that can happen with you. So that's what we need to. So every time major resistance, you need to clear your position. But oh no, I'm gonna super be bullish and it's gonna go to 460 and 450. Well, then be ready to get slaughtered. Remember, guys, that's what exactly happens. So you need to understand because I notice I got a couple of DM from other people, and they said they are a couple of people, they lost money on a Tesla short, and they were short, and we were long on last 2 days right here. So, and I don't want to right now discuss that, but later on. Anyway, so what happens is, to avoid anything, guys, take your money and run. particularly resistance area, support area, resistance area. These are the area where you have to be very careful how you play. So so Josh, what do you think is gonna go to higher? 430, 450, 450, 460? All right, so what we do is I will analyze little bit later. I'm gonna go through other indexes which is QQQ. So as you know, right now the SPY I'm targeting right now here in this area. We'll see market opens up on Tuesday, and we will analyze what market makers their goals are, and we go after them. So then what is QQQ doing right now? Let's take a look at the QQQ. So as you can see, QQQ, okay, you saw the same thing. The trend broken, it bounced, but it doesn't have any solid support here. It bouncing and it heading to around 330 area right here also. So same thing, QQQ has the trend line broken, heading to the linear line to test it, and that's what it looks like to me. We have a 50-day moving average resistance around 330, also similar area right here. Okay, so remember guys, there is no pre-positions, anything that could be dangerous, and you have to do your due diligence before you enter into any trade, guys. Okay, it's very market is very risky. Market always goes through the different cycles, and I don't want people to lose any money. That's very important. You have to work a little harder, man. This market is not like easy market. Look at that cycle. Have you seen like this kind of cycle, man? Woo. But if you know how to trade, you can make money too. So sorry. So yeah, so that's the QQQ, and then I'm gonna take a look at the IWM. What IWM is doing. IWM, as you can see that we just broke through the resistance. Same thing is the trend line we have here, and heading to the resistance, which would be around 194. Let's see how it goes. We have different resistance, which is 192 for the IWM. Now if you notice, I'm gonna go to the SPY, okay, and show you something. Okay, so when I draw my trend line, okay, so these are my resistance. Okay, so we did break this resistance, which is very nearest one right here. This is the line which we draw, and this one is broken. Right now we are trying to go this resistance right here in this area right here, this area which is around here, this area. So market, this is the critical area, guys. Right here we have a 50-day moving average, we have this resistance, we have sloping resistance also. So this is the area where 430 area has a bunch of resistance here. So whenever the resistance you go nearby, you got to be very careful. Excuse me. So now let's take a look at the volume, because I did tweet about it, and I thought to let me discuss with you. So what did I say? Last 29 days, right? Last 29 days from here to here. This is from here I count. The last candle right here is 29 days, the lowest volume. So let me add this chart is my, I'm gonna go to SPX so you can exactly properly see that. I draw the line here, S&P 500 right here, SPX, and if I draw this trend line from here to here, 29th day, the lowest volume in the last 29 days. Okay, so you see that lowest volume. So what does that mean, Josh? Why do I have to take a look at the volume? Well, we always need to take a look at the volume, guys. Okay, because market makers, there's a, so basically altogether excuse me, altogether market is right now super bullish, because if you take a look at it, what happened? Wow, look at that, candles are stacking. Whenever you see the candles are stacking on top of each other, is very bullish time. But then you got to take a look at the volume. So somebody told me that, hey, this is the highest volume happening in this history in this month. Guys, I don't see right now. This is very low volume right now. So we got to be very careful on this bullish sign. Okay, and we only thing is, you got to be very alert. The moment you wake up in the morning, it could be another day. That's how this market is, guys. It's a bull trap, bear trap. This is how things are happening. So yeah, hopefully everybody has their own proper time. When you buy options, make sure you have enough time in your hand, because market has a cycle. Look at this cycle lasts for 1.5 months. Well, let me get rid of this. You see this 1.5 months. So this cycle lasts for 1.5 almost, right? And then it's bouncing. So those who are bullish and they were bullish here and they're holding here, and now the market is here now trying to bounce, still they are negative, right? So you got to be very careful how you trade on your positions. Longer the time period, if you don't want to take a risk, avoid. You don't want to trade everything what we show on the screens, because every trades are varied. You know, if you do, some options are expensive, you don't need to trade that. Just avoid that. If it is not your genre, you don't want to go and trade. Create some discipline, guys, because every trader is different. You need to understand. Some people play Amazon, some people play Apple, some people would not even touch the Tesla. They only trade like a Neo and Roblox and stuff like that, because they want a safety, right? So there are different things can happen, and that's what I like to tell you, that hey, you got to be careful about the timing, because all these market options is dangerous, guys. Because when market goes in opposite direction, option goes 90% off, 90% negative, your account goes 90% negative, and then you're gonna feel and you sell and you got frustrated, right? That's why options are dangerous. So those who does not have experience, I would say go with your equity, trade equity instead of options. Stay away from options and trade with the equity. Test the water yourself, see how you feel. Or if you don't have, if you are new, go with the paper trading. Learn with the paper trading. That is how supposed to go, so you can save your money. That is the best way to go and learn. And then once you become master, slowly, then you can get your feet wet and go with the small activities and test yourself. You put yourself into the test and say, I'm going to put $1,000 and see if this $1,000 101% you lose $1,000. So how much you want to put it in 1,000 and go with the 1,000 and test yourself. That's how supposed to be this market. All right. So this exactly right now, I mean, the market is looking right now, where that's how we find it look like to me bullish. Now, where last time I discussed about it, where the market can go, let's go and take a look at the monthly chart, which is technicals. Every time I get noticed, those who are not here, 2009, I draw the trend line from all the way here for 2009. Then we tested in 2011, we test this trend line, then bounce. Then again we tried in 2012 and then bounce. Then again we here 2016 we tried the test, bounce. Then again in 2019 we tried the 19 right here, 18 right here, we tried to test and we bounced. And then again we broke in 2020 pandemic time and we bounced, right? So these are, guys, it's not just, hope you guys understand, whenever it bounces, there's an activity happen here. It's a 1 month, each candle represent 1 month of the work, 1 month of the stock market work. Okay, so this is what exactly happened. Then we took off right here. You see this, we took off and then we got rejected. So last 3 months, 4 months right here, 5 months is rejected. And what I did is trend line we draw, we broke that trend line. Every time you break the trend line, you draw the linear line and see how the linear line looking, and I draw the linear line here. Slowly we are heading into the different support level we will be heading. And my thesis of thinking is, every time this happens, we might test this. So what is the thing? What do you think, Josh? It can test 3,000. So SPX can test 2,900, guys. Okay, when? No, nobody knows the date and time, but these are each candle represent 1 month of the work. So it's a longer process. Could be 2022, could be 2023, or it could not even test also. It can bounce, but we want to go at that time. We do not want to go and jump in the bandwagon just because Josh said so. No, these are all technicals, right? We have to also analyze financial. We need to also analyze the geopolicy, and that's based on that we need to understand that how this all together our financial market is working, and that's how we need to get going on. That's how we need to basically analyze it properly. So now, as you can see, so why do I have to rely on this? Okay, let's go back to right here, 1987, guys. Right here I draw the trend line 1987, you can see, and then we bounce into 1995. Look at their linear line, right? I mean, look at that trend line, we all the way to up here, and then we broke the trend line. What happened? This trend line we broke, bam, we test the linear line right here. See that, which is in 2002, where we had a dot-com bubble, right? and then slowly we bounce, and we reached to this level of this. It took 6 years from here to here, took us 6 years. So, and then again we broke this in 2008. Remember this 2002, then 2008 we broke this line, and then we try to bounce right here, and this level to come back from 2007 to 2013. So another 6 years we took from here to here, come back 6 years. So if you have bought Apple or whatever the stock from here to here, and then you're holding your stocks, it takes a long time to come back. You follow? Any stock, not just Apple or any, most of the time of the stocks you hold, you have to go through 4 or 5 years of the process. I'm just trying to show you guys, okay, you have to understand this can happen. You can be always be optimistic or pessimistic. When market is going up, you have to be understand you can't be always optimistic. And same thing when market is going down like this, and you say, no, it's gonna go. No, you have to also analyze that what are the financial policies and things are working around, and that's how we need to analyze. So that's why I think this time, this is why this happened. Okay, what exactly happened here and why this is happening here. And I'm going to show you something here. So I'm going to go to the Fed balance sheet here. Okay, so I like to show you what exactly Fed is doing right now. So what is this? Many people would have the question. So this is what exactly this is the main cause. You see these. So this is the real cause occurred because of this. Right here we were what, 2019, right here 2019, and look at that. You see this? So Fed has increased their balance sheet. This is where the problem occurred, right here. You see this? So what happened, Josh, in this time? Well, we did a QE. We did a quantitative easing. What is quantitative easing? We did. Fed came out and said, hey, we're gonna buy all the assets, all the junk assets, everything, treasury bonds and municipal bonds and corporate bonds, and every junk debt we will buy. All the debt we will buy. That's what they came and announced, right? Now, and then also mortgage-backed security, MBS, right? Mortgage-backed security also they announced, and they said we're gonna buy this. So we were here, if you look at it here, we were here around $4 trillion, right here, around right here. This occurred, $4 trillion, and then we added up to $9 trillion, right here, $9 trillion. So $9 trillion means $5 trillion we added up into our Fed balance sheet. So now if you understand 4 trillion and we added up another 5 trillion in this period of time, record breaking, we added up 5 trillion. What does that mean? So we economy on steroid. So government, what does it mean? Fed keep printing, right? And when they print it, what happens? It's a cycle, supply of the money. When the supply of the money, they print it. They can print as many money they want, and they supply the money, and that goes into the bank, and bank lends money to the people and corporation and whatever the policy they announce, and that's how people got the money into their pocket. And that's how $5 trillion went inside. So you think this $5 trillion, George, went inside the stock market? No. Okay. So what exactly? What happened? Let's see here. I'm gonna go here a little bit so you can see. So this $5 trillion went inside. What happened? Who all got it? Well, when they announced all this, the 2020, when they announced the policy, everybody applied the loans and PP loan, this loan, that loan, billions of dollar fraud happened. Billions of dollar fraud happened, in trillions of dollar went inside people's pocket, corporation pocket. Many people got the money, which is they misuse. Now which are the assets they purchased? Well, many money came into the stock market. Okay, nobody knows how much money came in, but yeah, definitely a couple of trillion easily came into the stock equity market. Then I'm sure about $1 trillion went into the crypto market also, which is Bitcoins and Ethereums and many other crypto. Then we also went to the real estate market, remember, because real estate also is almost it's a big market, real estate. So a lot of money went inside the real estate market. Then I'm sure there is a different assets also, bond market and this market, that market. So many people went inside in a different assets they purchased that particular assets at that time, right? And that's how the $5 trillion went into the system. Now what exactly, Josh, is going to happen? So remember, I just tweet about it, and I want to show people, those who follow me on Twitter, I try to give as much information I can give guys, so you guys can all understand, because it's very, very important to every time I tweet. And look, what did I say here? 2022, where market is heading, right? How quantitative tightening will work, right? How that will work? Well, let's see. So same chart I was trying to show you here. The Federal Reserve next act will test the market stability. So what Fed is telling right now, you see this news, you got to understand, is the Federal Reserve resolve to fight inflation could be tested even before a recession hits by dislocation in certain concern of the market that are not well understood. This is about the more than just the bear market in a stock or impulsion in the cryptocurrency. Anyway, so what happens is here, how they're gonna test, because right now market is they are really worried right now. If you look at this, another one right here, look, let me see this. You see this, what it says? So right now balance sheet going to shrink. So when the balance sheet trying to shrink, what happens? The Fed right now, Fed did not, they had a really bad time in just to show you guys. Okay, look here, I'm gonna go back to here and show you so you can understand the chart. You see this right here, when we were quantitative tightening happening in 2018, look right here, you see this 18, right, 19, and then what happened? All of a sudden 19, we did not have the COVID at that time in August, but market had a big rough time going through this particular time right here in the market. And then you know what happened? I did a tweet about that also, and nobody noticing this, but I want to show you something guys, very interesting. Okay, keep this thing in mind. Okay, when the time will come, this would happen. This is what the Fed announced. You can see this. Federal Reserve says we're gonna do QT. What is the QT will happen? They're gonna do $30 billion right here, initial monthly treasury bond runoff, $30 billion a month, plus they're gonna have an initial mortgage backed security, which will be 17.5, so almost 47.5 billion. They're gonna shrink every month. That's what they're saying. But did you notice guys here? And then they say we're gonna have finally monthly bond off of the cap 60 billion balance sheet. So they're gonna increase after 3 months, September. But what he says here, you see this, FOMC lift the reverse repo rate from 30.30 to 1%. So right now FOMC, what they are saying is we're gonna have a 1% repo rate. So whenever you have the reverse repo rate happens, market, what happens is market, all the liquidity get flushed from our equity market, and they go into the reverse repo market. What is reverse repo, Josh? So reverse repo is another market where banks, they go and purchase the treasury bonds, right? Where they purchase all the bonds, and then they get the higher interest rate, and these are reverse repo markets. So right now they are pulling the money from the market and park it here, because reverse repo market is another excess cash. They have the cash which are excess, they can buy these here in this reverse repo market, and they can park their money over here. So this reverse repo market right now, so what happening is if you look at the bond market, is bigger than our equity market. So bond market, the bond value right now is going, remember the bond is supposed to go down and yield is supposed to go higher, but it exactly doing the opposite. Why they were doing yield is going down last few weeks, if you notice that? Because of this. But people don't know. People only look, oh look, the yield is going down, market is super bullish, it's gonna fly. But many people don't have the proper knowledge, so they talk. But what going to happen is going to be a big calamity going to happen, according to me. But when the date will not, nobody knows, right? But I'm just trying to give you warning, guys. Okay, those is up to you. That's why always when I'm live, people ask me the same question. I tell them, please go back to Sunday video, or whenever, normally pre-market video, which is like this. And I say, hey, I refer this video, go and understand, because during the daytime we don't have, during the market hours we don't have time discussing so many in-depth details, which I'm right now again discussing, that hey, this can happen, and that then I will refer to, hey, remember I said this, and please go back to that video. Okay, because these are all information I provide you guys free of charge, people many people don't even have the knowledge half the things, and they just simply go and bear and bull and this and that. No, they don't apply thesis. What I want people to apply the thesis. You have to do your homework, guys. Okay, based on this, you don't want to jump in. So okay, so what right now happening here is, so Fed is going to, now let's go back to here. I want to go back to here and show you what exactly happening right here. Okay, so what Fed is talking. Okay, so he says, so there's a Fed is uncertain how its action will impact the liquidity, or how the standing repo facility, which I was talking about, repo facility, which is untested, will be used. I cannot tell you how this will actually work out. Fed itself, they are right now little bit in a danger situation where they are afraid of that how this will work out. Why? Because this situation literally will never ever happen in the history. What we are into entering, we have entered into 2020, 2021, 2022, where we have the highest inflation numbers, where I hope everybody knows that we have the GDP to negatives, we have the China locking down, their GDP is going down, inflation is like 8.5%, Fed rate close to zero rate. Remember, the Fed rate is also 0%, record breaking debt we have. Now all the credit market is gone. Look at the credit market, then look at the record breaking mortgage debt, $18 trillion record breaking mortgage, guys. Okay, record breaking mortgage, that is also another one. Then margin debt, all record breaking margin debt. Then then what I would call it, we had a pandemic, right? The lockdown still going on. China has a lockdown. Many places we can also have some impact, little bit here and there can have. Depends on maybe fall time. We don't know, right? Then supply material. Look at the supply constraint. We have a huge problem. This is the biggest inflation. We have inflation is going high. Why? Because supply constraint. We have a lot of. Then the war going on. Then the food shortage. Look at, guys, never ever happened in the history. I'm just telling you. So keep all these things list in your mind. What I'm reminding you. Then energy, utility, record breaking energy prices, guys. All this is never happened in the history. What we are right now. Everything is happening in now. So if you want to list down all this, you got to remember this. If anybody want to be a bullish, they have to keep putting in the sticker on the computer right there. And then Fed cannot keep printing, give you the money free. Those who thinking that Fed gonna keep printing, no, because Fed right now is in big time trouble right now, guys. Big time trouble, I'm telling you. Okay, so you can keep printing money. You can print money and give a little food to the people, maybe a little bit gas to the people. You can't just just what they did last time, they can't do now anymore. They are in big trouble right now. They need to fix that. Otherwise then there'll be no difference between China and us. What it is? Chinese banks, I posted today, right? The Chinese banks are now, people check bouncing from Chinese bank. The bank issue a check. Chinese bank doesn't have the cash. Can you believe it, guys? This is what happened to China, right? So then what will be the difference between us and China? So I'm just giving you, the auto industry. Look at the auto. You can't even buy auto, man. People don't even have the auto industry. Then logistic price. Look at the price. Even target earning came out and they said $1 billion they paid extra compared to last quarter. $1 billion extra paid to deliver the same good what they had it in last quarter. $1 billion. That's why they had the profitability less, because logistic costs money because of the energy goes up, and then everybody suffer, and then the drivers and this and that and everything goes into, because it's inflation. Inflation is the biggest sticky, super sticky, guys. It doesn't come out like that. And then now remember, we have piled up $9 trillion balance sheet which we need to unload it. And now what would happen is, all the companies we go through the earnings, right? Every time we go through earnings comes out, you watch. I've been watching every day's balance sheet. EPS earnings are falling down now. Every company EPS is going down. Slowly EPS. What does it mean, George? EPS is going down. Well, the earning per share goes down. That means the forecast goes down, guys. When the forecast goes down, company goes down. Then they go bankrupt. Then they go banana. Remember, I have gone through all these cycles, guys. 2000s and 2008 and all these different this is all happened. So we have a combination of all these different years. So slowly the revenue goes down, and even company will suffer. And also that's why I say so that's why Fed is telling here. So what is saying here? This is in Bloomberg. Okay, what is certain is that the Fed starts shrinking the balance sheet while still rising the rate in successive half-point hike this summer. There will be unprecedented scale of tightening. Remember, tightening going to start in June, right? So the tightening start. If the backbone of the financial system start to crack, expect the Fed to alter its course. What does this mean? Expect the Fed to alter its course. What does this mean? Financial system start to crack, right? These are the things people would have a question. Wow, these are their words. Okay, if the why they have to say if the backbone of the financial system start to crack? Why they are worried about crack? If everything is good, why Fed is worried about the crack? Financial system crack, because already Europe has a crack, China has already cracked financial. There is no foundation in China, guys. Okay, and that's what I've been saying last many weeks nowadays. And now America is talking about this. Why? Because of, I told you, so many things happening around, surrounded by. So we got to be very cautious, guys. I'm giving you big alarm, guys. Okay, big time alarm. You know, this is the big alert, and it's up to you how you take it, how you analyze it. It's up to you. I've been saying this. I've been long time I saying, and that's what market is doing. It is up to you how you take it. So financial system start to crack. Now what? Why that? Why, Josh, you think financial system crack? Well, remember, guys. You know what is QE? When we did the QE, supply of the money. Now we have to do exact opposite, guys. QT. So all the money we supply, they have to suck it out of the system. So every money we pumped into the economy, that money we need to withdraw money out of the financial system. So how do we do? How the Fed will withdraw the money? Well, they're gonna do exactly same thing what they did, but exact little opposite. What they're gonna do? They're gonna start buying, right? Remember they did the start buying. They're gonna do now start selling. So how the QT works, just because remember I said, hey, how the QT works, I'm gonna discuss about it, right? So the QT, you know what exactly QT works right here. When all the treasury bonds and different kinds of bond they have purchased, all the varieties of corporate bond, municipal bond, all the bond they have purchased, they print the money. Where the money came from is out of thin air. That's how the money comes in the Fed hands. So Fed can print, and they have to now what they have to do, they have to shrink the balance sheet. How do they shrink the balance sheet? They whatever the assets they have to sell it in the market. How do they sell it in the market? They got to go back to the market, open market. Remember, guys, I'm telling you, open market. So what does that mean, Josh? Open market? Well, they got to go in open market. Or who buys those assets? All the banks, all the market makers. These are people. So they, why they buy those assets? Well, they might buy it because a penny a dollar, or 10 cents a dollar, 50 cents a dollar. So how the money how the money will become and buy those assets, because everybody gonna say, hey, you know what, let me sell my Apple stocks, let me sell my Tesla stock, let me sell wherever my profit is, let me sell that, and I'm gonna buy a 30 cents, 20 cents a dollar, and then I'm gonna, when the market opens up, I'm gonna sell it back in the market, because people know how, all the bank exactly know how to do that. So what does that mean? What would happen to that? So the moment Fed sells these to the open market, the value, so the cash gets sucked out of the system. Remember, guys, when Fed sell, the cash will be sucked out of the system and goes into government. And what government does it? Burns it, because that's how they nullify everything, because that's just how they print it. They have to again nullify those cash, because those cash are not going to be, that's what they want to do right now. They, how they create the recession, and that's how all the assets they will be buying, and I mean they'll be selling and getting the cash into the getting cash back, but they're not gonna get a $5 trillion. They are just trying slowly 47 billion a month, and slowly they're gonna go. Right now they have $10 trillion balance sheet right now, so they're gonna go 10 trillion. That means 100 months. No, they might not go, but what we need to do is, this is what we need to say, whenever they're gonna feel that recession is kind of very close to it and people are losing the money power, financial system start cracking, expect the Fed to alter. What does it mean Fed to alter? Means the reverse repo. Hold on, I'll show you. So what would happen is this. Okay, you see this, the reverse repo rate, you see this from 0.3% to 1%. They're gonna do opposite then. So all the money they immediately they're gonna reverse repo market. Maybe right now $2 trillion money moved into the reverse repo market. Then they're gonna say from 1% to they're gonna say, hey, we're gonna give you only 3% or we're gonna give you 2%, right? 0.2. You remember, guys, 0.2%, 0.3%, and then that money comes out of the reverse repo market and they start buying the assets into our equity markets, right? So that's what does this. That's what it means. Where the hell did it go? That's what would happen. Sorry, guys. You see this? That's the Fed to alter its course. This is how the Fed will alter its course. But do you think Fed gonna keep doing the same thing? Because over here they did. You see this market was crashing, and I remember the Trump came out and said, hey man, market is not good, this, and the VIX was also flying high, and then the stock rebound, and look at that, and then the pandemic came, and then bang, look at that, right? So this is what exactly happened, guys. So but this time, guys, look at this air in the balloon, right? This air in the balloon, they got to take it out as much they can. I don't know whenever they need to ready to alter, they might change that whenever it happens, but at this particular time they have no choice but to start the crack in financial system, because that's how they can bring the demand down, because this is inflation cannot be transitory. Write it down on piece of paper. If anybody says, that's what the stupid mistake they have done it. And we have the same captain of the ship who was riding in when we had a VIX in 2018 was 50, cross 50, and then in 2020 we VIX cross 50 is Jerome Powell. So we have the same captain of the ship. He's still riding right now this economy, which Biden appointed, first Trump appointed, and now the Biden appointed. So we have the same guy, and I guess we got to be very careful now, guys. Okay, so I give you a little heads up. I don't want to scare anybody anything, guys, because this is how I analyze market. It's not just these technicals. Okay, I analyze by these, and that happens because Fed is also targeting. So if anybody wants to be a super bullish all time long, be careful, guys. Always go with the market. Okay, so let's take a look at Tesla, because I'm many people were asking me about the Tesla. And Tesla is right here at the resistance, which is 756 right here. If we break this resistance, and then we have the channel, remember, guys, this channel need to break. That's why I wrote here, so 775 is the resistance of this channel. My channel need to break. This is the trend line. If that trend line breaks, then we can go and test the 845 right here, around 847 right here. I wrote down here too. So this is what I can see, a bullish sign here if that happens. But we have this resistance, and let's see what happens. So if now you think Tesla gonna go like that, it's all about the market, guys. Okay, right now the market is, look at this, short, right? Now short cover. That's the cycle, guys. Okay, these are all different cycle we have to go through. But many people asking me, George, is people would not have the knowledge, so they do not know is this the real bottom or not, right? Tesla is a real bottom or not? Excuse me. Is this the Tesla is a real bottom or not, right? And what I like to tell you guys is, no, this is not the bottom. Why? Because we have the whole process is still remain right now for the QT. The moment the QT starts, the liquidity comes out of the market, guys, and that when that happens, you will see that slowly, and at that particular time, people gonna start buying all these. When the Fed starts selling those assets, people will pull the money from here, and they go and buy those assets penny a dollar, because that's where the money would be, So slowly, same thing. Remember, people think, oh no, right here QT starts. This is what, whenever the QT starts, the balance sheet goes down. Fed balance sheet goes down, and then stock market, the liquidity gets sucked out of our market. Remember, guys, that's what normally happens, and people start losing their money power. When people start losing their money power, you're getting one, throw the one stone, get the two job done. One is you get the control in your hand. The demand get what is the job of the Fed? To control the demand and supply. That's where their job is. So how they're gonna do this? Because when they do QT, people will not have the power, because stock market goes down, assets, all different assets goes down, right? The moment asset goes down, what happens is your house value goes down, or your bank balance goes down, or your stock value goes down. You're gonna start cutting your your expenditure. You say, you know what, let's not go buy a house, let's not go buy a car, let's not go do renovate the house. You're not gonna go to Home Depot, you're not gonna go to Costco, crazy things. You're not gonna buy crazy things. You're gonna cut down. You're gonna just continue with your basic thing. Depends on your budget, depends on your things. So what happens? The demand dries down, but that doesn't happen overnight, guys, right? And then the demand dries down, the earning goes down, the forecast goes down, the stock goes down, the stock goes company goes bankrupt. And that's how the Warren Buffett comes in at that time and say, hey, I got the cash, but I will buy you penny a dollar. And that's how he buys the company. Just to give you an example, right? And that's what happens, guys, So this has never happened in the history. Whatever has happened, and we got to be very cautiously. So what I tell people is we got to go with the market, guys. Okay, I'm not here trying to tell everybody that hey, bearish or bullish. What we need to learn is how to be a bearish, how to be bullish at what particular time. And you overall market, you have to analyze overall market. When you analyze technically, geopolicy, then the finance, then only we can be successful. Otherwise we will be just one of the dummies on the social media who always follow somebody's tweet and say, hey, this is what my tips is, let me go and buy this stock because he said so, because I paid $1,000 on his subscription, and this guy he's a free guy. I don't trust this guy because he's free. The guy I pay him is $1,000 and he knows very well because he's all the tips are strong and it works out very well. Then you can work with that. But whenever it happens, look, remember, guys, you say, for example, somebody give you a tips short, and then you're shorting at the here, and then our market goes opposite direction. Whatever the money you made, you lose it right here. So you want to be one of them, or you want to be a smart champ to learn everything cycles. That's what I'm here, guys, to teach everybody here to learn the right way to trade. And nobody is right now doing this free of charge in this world for giving you 10 hours a day a lecture to teach you right way. I hope you guys can learn out of this, man. Because anytime you can make, so for example, you're bullish right here, for example, bullish, and then market turns bang right here, just like this, bullish, and then market goes this and then goes down, and then whatever the money you made here, guess what? That profit will be gone because you could not catch the wave, right? Same thing can happen here too. You want to be part of that? If you don't want to be part of that, yeah, then please join our community anytime. It's free. Remember, guys, it's a free of charge to learn. That's what I offer, guys. Okay, I hope everybody can learn out of this, and I will probably open up the space and take the questions. I know a lot of people asking on YouTube, man, a lot of questions on Discord. Anybody has a question, they can also type on the live chat, and I will take the question. I'll try my best to take I know lots of questions, guys. Okay, so I'll open up the space and slowly I'll taking the questions. Okay, so let me take the questions right now here. I'll be not taking anybody as a co-host, so hold on a second. Let me start. Anybody has a question? TQ, you have a question, I'll open for you. Then Angela, you got a question, I'll take the question from you, and then I'll go to YouTube. I'll take 2 questions from Twitter. Yes, TQ, you got a question? Okay, anybody has a question, let me know, guys. I'll just open the space. Anybody can jump in. If anybody has a question, just let me know.
Hey Josh, it's Angela. Hi guys. Just a quick question, and I'll keep this really short. Do you have, and I missed the early start of this space, but I'm just curious, do you have any input on, we all know that Biden and Powell got together in a meeting today.
Mm-hmm.
Any insight on that?
No, I did not actually, because I tweet about it. I say, hey, it's going to happen, and I'm sure there is something is cooking. That's why they got to get together, and it's happening. That's the worry. So that's what my 2 cent take is. But we'll definitely find out. Those are closed door meetings. It's very, very difficult to figure it out, because that's how I believe in politics and Fed. Whenever get together is something getting cooked. We do not know what is getting cooked, and it's dangerous to even think in that direction. Next.
Hey Josh, I just have a question.
Cannot hear you very well, Neil. Neil, if you can be a little louder. I'm sorry, Nilesh, if you can close to your speaker mic.
Yeah, it's BKNG. The ticker name is BKNG.
BKNG, B as in boy, right?
Yeah, the booking
Okay,
holdings.
okay. The booking holder. Are you long, short?
Short.
Okay,
I'm short. Yeah.
okay. You are a short on this one and long term, right?
Yeah, 15 days at
Oh,
least. Like
15 days.
the next
Okay.
expiry. Yeah.
Okay, so 390 EPS. The EPS is 390, and what are they expecting? Oh wow, 17. They're expecting forecast is super strong on. So this is seasonal. Look at the 17, 9, 20, $18 EPS they're expecting in next quarter. So that is outrageous EPS, guys. But if you take a look at here, is $4. Based on the $4, this stock got to go down all the way to the down. You know what I mean? Down. It means very down. So for me, is this stock is right here. If you ask me, the trend line is right here. If this trend line get broken, we can test. We can really test the bottom and this one. If this trend line breaks, then we have the support area here. Let me change my shit. I gotta change this. 1 second. Okay. Yeah. So this is the support area which is around this area. Once this goes, man, this can go down here, and there's a gap here to fill down the gap here too. No, gap is already filled. So then this can test this floor here too. So the trend is your friend. Remember, the trend is your friend right now, and what happening right now here is a critical area we are at here, right here. This resistance is 200 moving average. So this stock has a major resistance at $2,300. So
Yeah.
these can get rejected. If these get rejected, then baby needs to go down, most likely here. Okay. So that's what I can see right now. But right now, market, you have to remember, market first. If the market goes, market is still holding the green, then you don't want to short. You want to give yourself a time. Let the market decide. So market can test the 200 moving average and fake out, and then go down also. Remember, that can happen. But summer is also coming, and if the summer coming, and if this stock has a strength because of this forecast is strong here too. So that's why you need to properly pick the market. You need to look for market, not the stock. If I were you, I would watch the market closely. If I don't know, you part of the community to everyday live, then you would exactly know what exactly cooking here. And then I would not go immediately. Let the market go first. In some point of time, whenever we get rejected, then it could be a good one. All right. Alright, anybody got questions on Twitter? I'll just take the questions on Twitter.
Hey Josh.
What's up, man?
Josh, can you hear me?
Yes, I can hear you.
All right, perfect. Yeah, technology. I'm in the middle of the Atlantic on a boat, so.
Oh, wow, interesting.
But
Good.
Anyway,
Mm-hmm.
yeah. Thank you for the session, all the information, just absolutely amazing, and yeah, can't thank you enough for doing this all the time and giving of yourself like this. So the one that I'm looking at is Target, TGT. Obviously a huge gap down after the earnings.
Mm-hmm.
Now it's curled back up to resistance, and I'm looking if it breaks that 167.50 level ish to 168 level. I feel like it's got a pretty good move up to at least 182, and then maybe back up to around 200 if this bull market continues, or
Absolutely.
whatever this is.
Absolutely. So market right now, because remember they did sell off a lot here and they have oversold here. So they right now is trying to do the short cover. But remember, this is cheese here. This is the trap. Could be a trap, but it's a huge trap. So they might again go. They have a lot more room to go, and then they can get rejected also. But we need a market. If the market wind goes north, then absolutely this can go north. Remember, if the market wind changes, then we could be in trouble. You follow? That's what we need to wait for. So we
Yeah.
market first in this condition. Market first. If the market going, then this can go. But if the market get rejected, then this can also get rejected. That can happen. So we need to go with the market on this one, because I mean these are all consumer discretionaries, and then the staples and everything combined together target. So they do have groceries also, I guess. So, but yeah, could be good
Okay.
for the time. Mm-hmm.
Okay, thank you.
Thank you for that.
I really thank you, man. Coming back on, you are on the boat, and you still feel like to attend my space. I really appreciate, man. Thinking of top trading edge.
Hey, Josh.
What's up, TQ? How are you?
Good. How about you?
All right.
Good. I have a question. Okay, so we were talking about this earlier today. We just wanted your thoughts on it. So, China announced that they're reopening this week, right?
Mm-hmm.
Or Shanghai. So, with that being said, we were wondering, the stocks that typically get impacted when China's down, such as Tesla and Apple in them. Question one: does that mean they're going to continue on with the rally this week because of that news? Or, in your opinion, do you think the rally from last week may have already been part of this reopening as just happened last week and they officially announced it over the weekend?
China is a byproduct, side product. That's not the main thing. Is market is just it's just a cycle. So what I'm thinking right now, Fed is worried about to control everything because China also locked down. Now China opens up. That is a good sign for certain products, and definitely economy benefits out of it because supply is most important part is right. So it's a good sign, and market is also considering that. But again, they need to start slowly. But there will be in the social media that there will be people will pinpoint because the China opening is a good sign, but not just because of China, because market already started 3-4 days ago, and market always goes around and takes always turn left, bear and bull. That's what I think. It's not about China. China cannot change the equation what we have right now. China is way far. Yeah.
Got it. All right, great. Thank you.
No problem. Thanks. Okay, next. Okay. Meantime, while anybody wants to jump in, I'm gonna take a YouTube questions. Okay, guys. So if something anybody has, I'm gonna read through the YouTube, guys. White shoulder. Okay. Did somebody asking me? Did TQ girl get out of Tesla puts? I do not. If she's here, she's listening. If you listen to me, somebody's asking on YouTube. TQ, are you in the Tesla puts? Somebody's asking.
So I did not get an opportunity to get out last week because of the rally that started, but I bought them out. So hopefully I get an opportunity when the market reverses course to get out. But I have a week to get out. Let's see what happens.
Okay, thank you. Yeah, so she is holding her Tesla puts, and there are a couple of also people holding Tesla puts. Then Steve is asking, I think Amazon call go ballistic. Yeah, Steve, definitely. How much? Okay, let me see. How would that help you to John? Okay, I don't know about that. Seem trying to understand from perspective every meeting.
I answered this question already, Josh.
All right, thank you. Okay, let me get going on this important good morning. Anybody has anything to go? I'm not gonna go too many days. Okay, okay, you gone through. Okay, can you look at into MU chart? Okay, absolutely. Let's go and look at the MU chart. MU is right now consolidating in this area, which is $75, and right here. This is the support area, which is $670. MU has a resistance around $77. So MU has a resistance. Let me draw the pattern now. That change everything. So MU just broke the major resistance, guys. Okay, MU looks to me super duper bullish, and it can go to $78 if this continue. Market goes, remember, market first. If the market goes, MU can go and it can head into this area, right? Remember, guys, around $78 probably can go. That has a room to go. We'll see how the market looking, but market first. So MU looking good to me at this point. We are right here. We bounce from it. If the market goes, then MU can go, guys. Looking good. All right. Then what else? Look at the W chart. Okay, W horrible, guys. They are in a big trouble, but right now they are bouncing back, and remember, guys, it's a cycle. They lot of, you see, short, buy, short sells. So short cover right now happening. So these are short cover happening, depends on the time frame, how much time you have in your hand, and that's very important, guys. So always have enough time on this one. Yeah, otherwise the balance sheet is horrible. It's $2, $3 negative EPS, and these are all like something like this is horrible. These are super horrible. So they're gonna go down eventually. Now in this economy, this kind of stock can go down a lot. Only thing is we need to be very, very careful. Time is important thing. Okay. Yeah. So there is a lot of opportunity. People need to get out of these sometime, and you can enter back. It's up to you. But always take the money and run, man, and then again enter back if you want to. Market always create opportunity. Okay. Talking about so what our thoughts on Zim. Let me see Zim. Okay, so Zim is about we are above 100-day moving average, guys. Okay, so Zim looking good now. Okay, and Zim is look at that. So the see the tops were falling, right? So if you can let me show you. So this is the one top. This is another top. So tops are falling now, rising, bottoms are rising. How? Because look at this, nicely channels trending upwards, and we are crossing 200-day. Now we're crossing 150. Slowly we are rising. So Zim looking good to me, guys. Okay, whenever you see the channels, those are called bottom rising, because it's creating the channels and it's taking time. You see, this is not a 1 day, 2 day, 3 days. It's about a month and over a month, right? Process right here, 1 month. So these called bottom rising. So when the bottom rise is good, look at this bottom rise, slowly bottom rising, right? So Zim looking good. The technical point of view, Zim looking good. Their financial is also solid, and everybody need to now China opening, so they also benefit out of it. Yep. Can you check? Okay, I check that. Nvidia. Somebody want to check Nvidia. Nvidia is W pattern forming right now. If you take a look at it right here, is heading 203 Nvidia, and then that's it. The game over after that. So I mean, again, guys, is too early. But remember, this is W pattern forming. If the market goes up, Nvidia can go up. If the market get rejected, then Nvidia can get as also rejected. So market first, not Nvidia first. Remember, so that's why always, if you want to understand the market, we are always live every day. Market open, we are live, and you can join here, and I will navigate the wind which direction is going, and that's how you need to trade your trades. Okay, so I'll take some questions on I'll add another people, so I need to do reshuffling. I'll add more people. Sim, you got any questions?
I'm good.
Okay, thank you. Then I'm gonna put a few people on speakers, and then I'll take a question. You guys go. Yeah, hi, how are you?
I'm good. Thank you for hosting this space. So I was just going back to your point about quantitative tightening that Feds are doing. So I was just comparing chart SPY with the balance sheet by Fed. So I don't see like there is a direct relation between how Fed cuts their balance sheet and how market moves. So for example, in 2018, I'm checking right now that they were still reducing the balance sheet, but the market was still going up.
2018?
So do you have any explanation on that? Like maybe there is more that probably I'm not aware about, but you probably might have some idea on this, that this can still...
Yeah, so in September, October 2018, October right here.
Like in opposite direction.
Yeah, so October 18.
March and March 2018 and the balance sheet is at like what 4.40 trillion. And
okay, so let's take a look at here. So right, for example, 2018 here, October 18, right here, October 18 to October this one. Let me see October, anything on October 18 right here. July, and they started right here 18 right here. If you see this, if no, this is 17, 18 right here, 18 right here, August, September, October right here. Look at the date. She's going down.
Yes.
Right.
Yes. So if you start like by March 2018.
Yep.
March 2018.
Yeah, March 2018 slowly started.
Yeah, it's still going down, and if you look period between March 2018 till September 18. It was still market, as you can see, market going up.
Right here. So let me take it. 2018 market. And
Yeah.
yeah. So what happens
I
is.
found this indicator on TradingView. Somebody made a custom indicator which shows you the Fed balance sheet. So you can simply compare it right there.
Yeah.
On the TradingView itself.
Right. Oh, if you can DM me, that would be great. I'll take a look at in that one also. So okay.
You can simply write US Fed balance sheet. It will show up. So
Okay. Right here. US Fed balance sheet right here. Okay, good. This one right here.
The YouTube feed are slow, so I'm.
Okay, so
your YouTube feed. Yeah, I think this is the one. Yeah.
Okay,
so
if the feed right next to the volume button, there is a live button on YouTube. You can click on that. Then it will be an instant live. On YouTube, those.
Actually, it is live. It is live. I'm watching live. Yeah.
Okay. Alrighty.
So yeah. So I changed the time frame to weekly. And so just to make it better visible, so I changed the time period to weekly. And if you go to the weekly and see,
Okay.
and now look at this week of March, there was a big bar the whole week.
Pardon, one second. Let me take a look at it. Okay, 2007. This is 7. 2015. 2018. Right here. Okay. Okay, right here 2018, little bit right there.
So yeah, so March end till September. So
September, actually September to
you can see
December.
From March to 18.
Okay.
March 2018. So yeah. Right. So March. Right here. So in this big one right next to you. Yes. March, end of the March. So where you are having a support, right? The support line, right? Done some moving average. So yeah. So March. Last week of March.
Okay.
Last week of March till September, which is making another new high, all-time high. Next.
From here.
So this period, if you look at the balance sheet was actually going down. Balance sheet went down from 4.4 trillion to 4.2 trillion. So like there was a $20 billion cut.
April, May, June, July, and then again they went it down, they took it down, then they tanked it up here in December. Yeah, so from here to here they took a little bit time from the balance sheet from January to December. So 2018 it was up here, they took it little up, then they had to bring it down, and then they announced.
It was actually in two parts. So they let SPY made another all-time high, and then they took it down again in fall of 2018.
September, October, November, December right here, and then this one was January, February, and March. So this is the 3 months right here. They took a little bit in this way, but okay. So what I would think right now, that time market was not this much worried about what we have situation right now. That time we have no inflation. That time we interest rate was not in a situation like what we had. We did not have China lockdown. We did not have the GDP negatives, right? So all this big elephant in the room, that was not the situation. So they can manipulate that. The market was not too much worried like how we are worried right now. Every Fed comes out and say, hey, they are basically worried. So this time, yeah, we might have a little impact, but I think this time we have more because we have to control the demand. That's the bottom line, because the demand is out of our hands right now, So that's what I can think right now. Understand this, we can definitely compare little bit here, bump, go sell off happens and all, but we always need to keep it in mind.
Okay, yeah, thank you.
No problem, thank you, man. But I appreciate bringing this to me, and I'm gonna deep dive in more if something I need to keep this.
I even found the same pattern in a couple of other weeks where I saw this indicator and you can see the values declining for the QT, but there was market was still.
Gotcha. Okay. All right, we'll see how things goes through the market, but all about the cycle, guys. We have to go through the market, always go through the cycles, and we have to be part of the cycle. Otherwise, what happens is we can be washed out that's what we need to know. Yeah, next Sigma is you. I tried to add you 3-4 times so far. I don't know you there or not. Okay. Meantime, I'll take a question from YouTube. Oxy, if while if you have any questions. Oxy is looking great, guys, because energy is flying high, and whenever anything parabolic moves, guys, okay, whenever anything parabolic moves, right here, right, whenever this happens, in particularly like this situation where the energy is flying high, energy in a huge demand, right, and I don't like to catch the fish from the top. Remember, that's what I can see right now. So definitely Oxy looks great here. As you can see, it's from slowly grinding higher, and it's going the way energy is right now going. Oxy can go higher, and that's why Warren Buffett invested money too. So, but again, I don't like to catch on the top. Remember, you 5 days right here, like this, and then market maker, they can also pull it back. At that time, you see this higher high, higher low, higher high. Whenever higher low happens, we'll see, or you can have a breakout some coming in soon too. Let me see weekly if anything happened in this company. Yeah, there is a resistance coming in now, this area, so it has a room. So this stock can go, guys, $86 based on this. This is the area where I'm touching maximum area. So for me, I like to get rid of this, and I need to draw this and see what exactly, where are we. Right here, guys, take your money and run. I'm telling you right now, take your money and run. This is major resistance, and then it can get rejected again. You follow, you see this weekly chart I draw here. If you see this weekly, it can, this is a major resistance. It can break and it can fly, but remember, it's one candle 1 week. So if I were, this is the, we are always, I teach that whenever the resistance, always take the money out and get it on side, and then always market create opportunity. You see this, bang. I'm not saying it can go down. See, you never know, whatever happened, but right now what I see here, I would like to take the money out, and then we might test this floor. You know what I mean? You never know, right? The market maker, they don't want oil to go fly high, and that's why Biden wants to talk to Fed. We don't know how they control they can control gold, they can control oil easily, man. I'm telling you, if they can control the gold for the sake of the bond, they can control the oil also, man. Okay, on time will tell. Okay, I'm not I don't, what I do is I take the technicals, and what I see right now here is the resistance area here, very critical area we are heading into, and then yeah, you never know, so be careful. Right there, resistance is at $73 area right here. Okay, so market can fake out and then can get rejected like this. Is can happen. So critical area right there. Okay, takes on puts. What Oxy market is forward looking. Well, Oxy, if you want to short, you got to be at the resistance, and you got to be dangerous. Oxy is like a hot cake item. You got to be very careful how you trade. You got to trade with the market. If the market is tanking down, then you can go with it. But if you're going against the wind, you can wash out. So you got to pick the day. You got to check at that particular time when we are live. Remind me, we can check and see how market looking with the Oxy, and then we can go from there. Because they are right now, they're making good money, man. Their balance sheet is not bad. Look at that, $2 is under undervalued stock. $2 EPS, it's undervalued stock. I like to short the stock which has a horrible foundations. Financial foundation is weak. Those are the one which are negative EPS. Those are the one. I don't like to short Oxy because it's too high. You gotta be careful, man. But if the best thing is to, whenever the market is basically testing the wall, getting rejected and then bringing down, that time you can intraday. Overnight dangerous. Okay, I can take the question from Sigma. I ID you 3-4 times so far, and you trying to jump. I still did it. Okay, you got a question, Sigma? Okay.
Hey, what's up, bro?
Hey, what's
How's it
up?
going, Josh?
All right, what's up?
It's working now. Hey, so when you went over MU, you had that red line that you put in as your resistance. What is that red line? What moving average is that?
200.
Okay, that's the 200 day at 77.89.
Mm-hmm.
Awesome. And then can you pull up SPX again? And so what's your next level on the SPX? Before the 4,300, I mean.
Then if you
You
take a
have
look
any-
at the Fibonacci, we have the next level is as 42.75.
42.75. But the major resistance is that 43.05, right?
That's the we have bunch of coming in now. We have 50-day moving average also 42.78, 42. But that depends on tomorrow. Let's see the candle. Let the market start and then we'll know where it is. 50-day moving average 42.75.
Okay.
But when the market opens, that is the best way to look. You got it?
Yeah. I snapshotted it. I just wanted to get what you had.
No problem. Thank you. Alrighty. Can we roll over on June 14 puts? You have a puts on Oxy? Naveen, you said you have a rollover on June 14. What is it, June 14? Oh, you have 2 weeks. It depends on it. I don't know what it is. What do you have, what not. Okay. Market is forward looking. Forward looking. Yeah. Okay. So the scenario of the somebody's asking me market is for in general SQQQ put. I would not right now. Do not go into the puts right like that. You got to go with the market. So SQQQ, no, I would not go anything short right now. Market is bullish. That's what I feel right now. Let the market condition open tomorrow. Right now we broke the trend line. We are breaking the resistance, and market is going higher. So I would not have a short on SQQQ buying puts or anything like that. Oh, buying the SQQQ.
No.
Yeah, you're right. Yeah, SQQQ buying puts is bullish. Sorry, I'm sorry. My mind was not. Yeah, you can. SQQQ puts is bullish. So good. But again, you have to go with the market, guys. Okay. Got to go with the market tomorrow. Let's see what happens. But at this point, it looked bullish. Always let the market go first.
Now, I don't know what resistance you have for what we broke out of. Like I have on the SPX, I have 40.90, and then we closed at the 41 58.23. But I'm looking at it on a 4-hour right now, and the second candle is still below that 40.90. Do you think that there's we could possibly just see like a rejection, like this week, tomorrow?
I mean,
we haven't like gotten like much of a close above some of these levels, right?
man, I don't see any rejection right now. The way it looks to me, and the path is clear. I don't see any resistance right now. If I see something, I say something, but I don't see anything right now. So it looks to me path is clear.
Okay.
All right, next.
Hi, Josh.
How are you, man?
I'm good. Yourself?
All right, hang in there, man. What's up?
Thanks for everything. This question is irrelevant. Any thoughts about housing market? What's going on with the Titan now and all that?
Yeah, so housing market, if you ask me, Jalal, they are the last one come into the picture. Why? Because if anything happens, housing market, the consumer get affected the last in terms of, and then they go, if anything happens, calamity happens, then housing market come into the last because they go foreclose, they got to go to the situation and all. So when the QT starts, the housing market will have a big play. So mortgage rate. So this is what actually happens A mortgage-backed security, they will also come into the market for sale. They'll be free floating. Remember, guys, open market. Everything will be open market. People, bank would love to take the, pull the money out of the equity market here, and they're gonna go and buy those all the garbages, which whatever they think you want to buy it, and they care about their profitability. So they plan accordingly. So they buy all these securities, when the Fed dumps, because Fed doesn't care about profitability, right? Fed is free money. You and me want to sell something, we want cost, we have a cost. They don't care about it, they just print, right? So for them is whatever they get, and that's why bank love those to buy those assets, those securities, and that happens. Then the mortgage, when they offer less money, that means the mortgage rate goes higher, because that's how the market decides. And when slowly mortgage rate goes higher, then people won't be able to afford. Those who have issues, those who have those arm loans are, which are prime rate loans, they can be affected. Plus new loans, those who wants to buy the house, those who sign up a contract with the builders and say, hey, we're gonna buy the house, and all this construction going on last 6 months, 8 months, and they did not finish, and if they want to go through closing, and that time the rate is higher, they'll be breaking the deal. Say, hey, why would I pay at the time of the closing? At the house is, once the house get ready, supply. I know the housing market has a big supply constraint. You know that, right? So many builders could not finish the house, and bank cannot lend the money if the house is not finished. They cannot close the house. House has to be finished, then only you can close. So and nobody wants to pay the big deposit, and I guess so. I'm sure that area will be big vulnerable. New housing market also, new builders and also. That can get affected. I don't know. We will see whenever market when the starts happening. Slowly we'll see how the things works. Everything
So
goes.
you're saying this month we should hear some crack?
Slowly it starts. Yep. Slowly you will see that the market will, the liquidity will be pulled out of the market. So that's what my thinking is. It's very, very bad time coming, guys. Okay, that's what I can think.
Hey Josh, can you pull up your Tesla chart?
Thank you, Josh.
No problem. Thank you.
Do you have a 780 in there?
The resistance?
Yeah.
Yeah, right here, 7. If you want to put those are like thin. I don't count those small. So let me go on 30-minute charts and then analyze it. So my resistance are right here. So my resistance is 780 right here. My channel. Remember I said my channel.
Yeah. Okay. So that's when we break out of your channel. If we say keep moving up this week.
Yeah. Once we break these, then we can go to 847.
And then right below that, the line that we just popped above, what's that at? Is that the 762?
This one?
The one that we just broke. Because right now I have a line that we just broke on Friday between like 752.61 to 753. And the one that we just broke out of, the most recent one.
Oh, this one right here? Yeah, this is 757.
So let's say we hold above that, and then we come up and would you want to see a breakout of your what would you call this, your zone, or would you play it up to the end of that zone?
Right now is right here. The market will test here and looks to me super bullish, and then the channel coming in is a few days to go, man. Maybe they will. It's not gonna be over in one day. This process is bullish right now. So remember, there's a gap here too. Right here, you see this gap. That gap is at around 800, and so market will they will take it to 845, 47, and then there is a gap here at 857. So everybody think, oh, it's gonna be gap, and then people they try to fake it out, and then they can dump it here too. This is the thought. Okay, this is not going to happen. This is just a thought. We have to always look at every scenario. So this can happen. Just a thought. but we'll see how whatever they do. Market first, we go with the market. If the market goes down, then this Tesla can go down, but if market goes up, then Tesla can go up.
Thanks.
Mm-hmm. Mm-hmm. Okay. Okay, next.
Josh, can you look at the NQ?
NQ? You mean Nasdaq?
Yes.
Oh, okay, okay. Okay. NDX.
Yeah, or slash.
Oh, the future?
NQ. Yep.
Okay, okay. Okay, so future is right now, let's take a look at it, is oh boy, look at this. Okay, market is trying to, they're gonna open it low probably, and then they're gonna take it up because that's what their plan is. Right now they want market to go up. So future is, we just broke the trend line on a future if you take a look at it right here. So they're gonna take it down probably. I don't want to believe this, whatever it is the future is. We'll see in the morning if unless any bad news coming in or not. So yeah, we'll see in the market.
Okay, thank you. Yeah, it was a really fast flash.
Mm-hmm. Yeah, right there.
To the downside, so I don't know if news, is present or what have you.
They all dirty games. Pre-market, all these dirty games. I can't trust that. When the market opens, that's the real game. I trust that because that's where the money comes into the play. All these pre-market, post-market, is all game. Can't trust.
Were you just on the Nasdaq on a 1 hour or a 1 day?
1 minute, man. I was just checking. Yeah, one day. Yeah, right there. This is future, Nasdaq future.
NQ on 1 day. Okay.
Mm-hmm.
No, the other one where you put that line in for her.
Line.
Yeah, where you had that line and it broke down that line, the futures.
Yeah, the MACD is not looking good.
Yeah. Where's that? Okay, hold on 1 minute.
Yo, Josh, can you look at Mara?
Mm-hmm. Yeah, the Nasdaq future might test here 12,755, and then probably bounce. They might create a little movie here. Probably they might go and break this trend, and then they bring it down probably. But that's the pre-market, so I don't trust this much, man. Whatever that this pre-market is all game, and showing cards are different and playing cards are different. That's how I believe. Okay, so we'll see whatever happens. Mara bullish or short? What do you want, man? And Mara, they are super duper short, and now they're short covering right now. So if the Bitcoin is all about the Bitcoin, same thing. So in the long run, they might. Right now they are trying to go to $12. This bouncing a little bit here. But Bitcoin is not supporting, guys, and I'm telling you guys, look at the Bitcoin, man. Super duper bad right now. Bitcoin is going. Why? I'll show you something. Okay, so I've been checking on Bitcoin. So the Bitcoin bounce, and people think, wow, 32,000, these, right? People got super happy on it, but this is the trap. Be careful here too. So the Bitcoin has a pressure downward. The wedge broke upward. You see that wedge? It broke upwards and it is going good. And then maybe market right now had the resistance right here at this area right here. We got rejected. And see what happened. Oh, wait a minute. This is not the resistance. Resistance is right here. So this is the channel. If we are into the channel, we're gonna ping pong in here until the SPY is bullish, and when the SPY turns bearish, then gonna break the support area. So we'll see. Right now Bitcoin is bullish, guys. Okay, from wedge broke upwards, and we are right here in the territory. We have resistance. If the resistance breaks 32,500, then it can go test here, which is 34,700. So at this point Bitcoin broke the upward resistance. It looks bullish. Bitcoin is right now bullish. We need to break this resistance. It tried to break today and got rejected. So still long way to go. Let's see. Market is bullish, and I think it's gonna break this resistance probably. Let's see. Right now Bitcoin is bullish. Somebody is asking TQ gold still in SIGA calls. I don't know. TQ, are you still in SIGA call?
I sold them on Friday. I think I announced them when I was selling them too, but I will repurchase them again tomorrow morning because their trend has been that by Friday they go up, and then on Mondays, Tuesday they usually dip down, and it's been a cycle for the past couple of weeks. So I'm just playing the market as it happens.
Okay.
What was that resistance? Resistance you had on Bitcoin? 31,625.
Yep, 32,500. 32.
32.
Yeah,
536.
Yeah, 32,500. So if somebody wants to play Mara, they got to watch out this resistance. If the resistance get rejected, then the Mara can go down. If the resistance breaks, the Mara can go up. That's how probably market will play on Mara. So if you look at here, Mara looks right now bullish, and it can go and test probably to 1187 if the Bitcoin goes, if the market goes up. Yeah. Okay. Jeff, you raise your hands. What's up, buddy? Jeffrey.
Yeah. So just kind of like a theory. Everybody and their mom thinks we're going to, 4,300 to 4,500. If everybody is saying that, couldn't the market do the opposite?
No. Market, the market can do anything, but right now overall scenario is everybody's bearish because market sentiment is completely bearish. Talking and taking position is different, right? So still people are bearish. So you need to make everybody bullish.
So and then another idea that I have is. Biden is coming out talking to Powell about inflation. Another way that they could fight inflation is remove sanctions from China, which I think would pump China, right? So if they do that, I mean, that's something they could easily do and they're in control of. If they remove the Trump sanctions from China, that could possibly help China stocks. So just if anybody's looking at something, to watch out for, that could be possibly bullish China. And plus they're opening. Right?
Yep. Then we need to look into what are the tariff. Where and all we had a tariff. For example, I think solar panel we had a 40% tariff Trump put it on the solar panel. So that is one. You got to look around the corn. I think the corn. I don't know. You got to look which commodities, what not, what item we were buying from them, and it had been heavily taxed. Mostly the EV area was heavily taxed. So we need to look into that. And that probably those companies will benefit.
Hi, Josh. First time listener. I have a quick question. What is the market maker pricing in the expected move for this coming week? Like one standard deviation, what does that look like in SPX? And also the skew currently that basically weights how much hedging is going on from a hedge fund. I mean, it doesn't seem like it's showing any, significant move toward the downside. And could you just, elaborate your point of view on that? I mean, how would you view, except for, charting or, putting lines on a chart? I mean, from that perspective, how you gauge the market?
Oh, I already discussed all these things. I don't know. You just joined or?
Yeah, I joined a half hour ago.
Okay. I did discuss. So the video has been recorded on YouTube. You were able to rewind that thing. So it's a long topic I discussed, and I showed many things on it. So if you on YouTube, I don't know, are you on YouTube too, or just the space you join?
Just a space.
Oh, okay. No, I have recorded on YouTube and also maybe on Twitter also. It will be recorded. So if somebody want to go back, and I always every Sunday I always go through market conditions and all, a lot of things. But overall, what I think is the markets are vulnerable. If you ask me, my thesis, and so this is all the short covers, and the market has cycles, and that's what I teach. This everything is cycles. So for example, the SPY. If I take a look at the SPY also, whenever the you know I did discuss a lot on believe me, so very interesting. So for example, SPX, if I look at SPX, and I went through my monthly chart, and then I described my whole thesis, why I think this technical can be, my trend line can touch the linear line because of the QT about to start, and so many varieties of things are happening surrounded by. So combination of every years we have gone through the market touch. And also, guys, remember which I discussed earlier about the wicks. If you take a look at the wicks in 2050, we 2018 we touched the 50. Remember 2018 we touched the 50 mark on February, when QT announced and all this thing was going on at that time also. Then in March 2020 pandemic happened, we touched 85. And then
I agree. I mean, those are some major levels, but besides looking at any major level, what other indicators that we should take into consideration, like hedge funds, right? I mean, what are their, where to go for duck and cover, and what indicators or what data that we should be looking to see, okay, the market capitulation has started. Right now,
okay.
You can track this for another 6 months. Oh, we're going to go down, or there's a risk to the downside. Everybody, in the market knows that, there's a risk to the downside. So, but they are basically, you need to establish that sentiment, okay, are we safe right now to, take some risks, toward the upside, and if, something happens, what is the falling knife look like, and, what things that we need to be mindful, except for the price action. We know QT is coming, we know that 50 basis points, coming up every quarter, right, that adding into, will be deflationary. So that's like a binary event, right? We all know that, if this happened, that will aggravate, the move toward the downside, right? But, for a person like me that who's going, doing intraday or swing trading, what things that we need to look at the daily level, that, put us at ease, that there's not much of a hedge going on, there's not much of a capitulation, the VIX is not, it's still oscillating between certain numbers. So, just something to hold on as a retail investor, that gives us some sort of confidence that we are not gonna hurt ourselves going into this market.
Okay, so that's the reason we always I always go with the market conditions in terms of where the markets are when the market opens up, and I always believe in go with the market when the market goes with if the wind is going north, we always go with the north, and if the wind goes south, we go with the south. And that's what I tell. Why? Because I always go to my technical first at the time, particularly with things that are happening. But overall condition, if I analyze, I go my technicals also with the overall condition. Whenever my trend line breaks, I go with that. And then again, I discuss here also that if you look at the many people look at, oh no, look at that, the yield is going now, yield is coming down, the bond is going up and stuff like that last few weeks, and say market going to be bullish. But then people don't, I always look at the hey, remember this, because the Fed also announced that hey, we have the reverse repo market. So whenever the reverse repo market goes, they want to control, because my Fed is the one who is the QE, and that's how the market was on steroid. And then now to control the yield, they have another tools which they use is the reverse repo market. When the reverse repo rate goes from there, you can see on your screen is 0.30 to they raised to 1% straight from 0.30. So what does that mean? $2 trillion went inside into the from our equity market to go when inside the reverse repo market. So that's where all the hedge fund and all the big banks and all the parking money over there, because they are getting money right now. They secure, plus they're getting good interest rates. So it's a safe haven over there. Same thing again in QT. When the QT's day starts, they're gonna pull the liquidity out of the market, and they're gonna start buying all these assets.
So when they pull out the liquidity as a retailer, what should I be looking? Should I be looking at the bid-ask spread on SPX to see if liquidity is there?
We do look at the flows.
What are the signs, except for using the charting or the price action? What are the indicators? Are we looking at correlation between Nasdaq, SPX, going toward down? Are we looking at the breadth? Are we looking at how the total volume? On the option chains. I mean, how you make a sense out of it, except for looking at major level, because those major level, we might be in that level or in that cycle for probably the next 6-7 months. We probably go up, we could probably come down, we go up and down. So it's kind of a little frustrating, looking at these charts every day and trying to come up with direction.
Yeah, so what we do is we look at the option change and look at the dark pool data, and based on the dark pool data, there's a lot of wicks being bought. I mean, just to give you example of the wicks, so somebody bought a strike price of $75 wicks expiring in October, $75 strike price. So he's expecting, he invested $8.5 million on just an out of the money call. This is out of the money. It's very dangerous to buy out of money calls, and investing $8.5 million on that particular premium is outrageous. So all the calls been bought at $40, $35 strike price. So there's a $8 million, there's another $8.9 million calls. These are big volumes, been bought on weeks on particular to that. And then I also look at the let me find out. Always, when we are live, I always show the dark pool data to the people so they can, people can see that, and I tweet. So now another one right here, I tweet about it, is this SPY now 6/17 June 17. It's like $4 million. Then there's another $1 million, $2.2 million puts, 373 puts been bought for $5 million puts been bought on June 17, and they are out of the money calls. 373 SPY on June 17. So people do buy, these are dark pool data I'm talking about. So there is some activities going towards the long term, is going towards the puts, and we've been analyzing similar like activity always happens, and then it does, market goes in that directions. So all the equations are setting very well, pretty much overall market condition based on these all QTs and all the dark pool data and technicals, and based on that, I think the market is heading south in a long term basis.
Hey Josh, and buddy who asked this question, Josh, if you pull up on TradingView, ticker PCCE, it's the put to call ratio, PCCE. Yeah. And then if you look at it on, right now I'm just looking at it on a 1 month. We could start that far out on a 1 month.
Yeah.
And we just gotta squish it together a little more. Starting it from 2008 to recent. Yeah. You'll see it anytime it's held over that 1.4. Okay, when's the first time? 2008, 2009, right? And then when's the second time? In that, around 2010. And then we get it again in 2017, 18. I forget what happened. You talked about it. I was in the market then. And then we come back. You said we were going to go in recession around then, right? And then we come back to COVID. So using this as a gauge, just as one indicator, let's say right now we're on in May. I think it was May, beginning of May. I think that we bottomed. What was it, May 12th or something? On here on the 1 month, it says May 2nd though. But I'm sure if you go on a smaller time frame, it'll be more specific. But if we get above that 1.4 and hold, looking back historically, that would have been a good time to buy, because that's when puts were at its highest, right? Anytime it's over, the middle line is that 1. So if you're above 1, puts are higher than calls, and if you're below 1, calls are higher than puts. And if we look at it right now, we're at 0.7. So what does that tell you?
Yeah, I would draw the line here. This is the maximum area right here. So instead of 1.5, at least you can consider 1, just to be safer side. to look into the call side. So I would at least do 1 instead of 1.4, because 1.4 is still a little bit higher, but your maximum line you're touching with the around 0.98, you maximum area you're touching on it.
The reason why I refer to that 1.4 is because if you look at it in May, we like almost touched it. We got up to like 3.8. We got up to 1.35, and then we came back down. But we saw what happened in May on that date. Remember how bloody we were?
Yeah. This was the very bad month, was it? But now it's going.
Yeah, that was on May 12th exactly on a daily chart.
Yeah.
So what do you think about this?
Yeah, definitely. So it's we all price to put and call ratio. We always look at it and see what exactly happens on this one too. But
now look at that big red candle you have in June. At the end of May here. So that tells you now.
No, this is daily. This is daily.
Daily, yeah. So what does that tell you right there? We saw a big change, right?
Yeah. Let maybe the market. We need to watch the market, man. Right now, because this. Yeah, we need to see the market. When market opens up, the real data comes in.
No, he was just asking for one indicator, and this is one that you could look at on a longer time frame.
Yeah, the varieties of things we need to look, and we got to look at the weeks. We got to look at the price to call ratio. Look at the overall the reversals, and look at the look at where the monies are moving. I'm moving out of it. It's not only just the technicals. It's not only just the flow. Also, we need to see where the money moving out of it, also or moving in. We need to see both the side. We got shorts covering or not. There's a varieties of things happening, because our market, whenever the market get oversold around 70, oscillator gives you 70%. That means the market can rebound and go back to the, it can go back to maybe oscillator to 0, and then it can get rejected, or maybe oscillator can go back to all the way to up here also, which is around 30%. So yeah.
Hey Josh, can you do a quick review of the dollar index as well as the TLTs?
Yeah, so basically, the dollar is more vulnerable at this particular time, because we cannot have a dollar going up. We also need to have the dollar controlled by. Why? Because we do export and import, right? And when America exports a lot, we have a loss. So they have to manage very well. That's the reason they want all the other country to increase their Fed rate or central government rate. And many countries are slowly trying to collaborate, but they are also in a deep trouble right now. Like UK, they just raised the quarter point, but that quarter point is not sufficient in these market conditions. But just the heck of to let the US know that, hey, we are also trying to participate in raising the interest rate. But China is not doing, and Japan is not doing. They are going opposite direction. They are cutting the interest rate right now. So there are different scenarios right now in terms of how they are going on. But technicals. Hold on a second. You are asking me technicals on this one. I mean, man.
Yeah, I mean the dollar weakening is bullish for the market, correct? So we're at that trend line. If we break the trend line, wouldn't the market continue to go up?
Market the currency market is the big market, big market than us. So I literally 100% I don't apply for the cycles, though the dollar is going down, and we are right here at the testing period. But our cycle over there in the equity market is little bit different right now. So yeah, we will keep eyes on Dixie too and see whatever it does. But if you look at it, Dixie was going up, and when the market was going down, if you notice that too.
So the next we're just in a wait and see. Is that right? Am I reading that right?
Yeah, so I mean, when it comes to Dixie, many people say, oh, I always follow the Dixie and with the market and all. So I mean, literally, if you take a look at it, what you compare the chart right now to front of us, and let's look at this is Dixie, and this is our SPY right here, right? Just a second. So if you look at it, 1, 2, 3, 4, 5, 9, 10 days. Look at the 10 days we were here, and market was dropping since long time. And this market trying to climb up right here only. So only 5 days, but the Dixie is dropping since 2 weeks. You see that? So that's why.
Yeah, good point.
Yeah, I don't like to correlate like that. That's why I don't use the Dixie as an indicator for trading to analyze that market is going up or down.
No, thank you. And then how about the TLT?
Oh, how about TLT? Yeah, yeah, so TLT also same thing, Angela. What I think is about the TLT is all about reverse repo market also. You got to look that too, because technicals is breakdown is going down and then it bouncing back, but this is not the real QT start. The whole game changes. So you look at the bear flag is setting up probably, I don't know, wedge or flag, let me see, but yeah, this is the wedge, upward wedge. So yeah, this is the wedge is forming up. It's yeah, so TLT is, remember guys, like I said, remember the reverse repo market, the money was pulled from the liquidity was pulled from market, and then it's when inside the reverse repo, when something goes in reverse repo, the TLT bounced, the bond value was gaining and the yield was going down, and people were celebrating because it's good. And I can't just analyze, we can't just trust that, because it's like I said, the back door was open in the market where nobody knows, or we have to keep eyes on, is the back door open or not. And there's reverse repo, they jacked up the interest rate from it's not interest rate, jack up the reverse repo rate was from 0.3 to 1%. You see that? So that's how they attract all the money to pull the money out of the liquidity from the market, and people go and buy safety over there. It's a $2 trillion went inside over there. That's the cash access went inside the market, went inside the reverse repo market, and that's why the bond and the yield was under control.
Thank you.
No problem. Thank you. All right, guys, we can take another questions and then call it a day, probably 9 o'clock.
Would you look at Apple quick?
Apple King, man. Apple. Yep, so Apple, we have a resistance right there, and
150, right?
Yeah, 150, and the next target is 159, 160 right there, 200 moving average. But we remember we are right here. This is important area too, which is right there at 1. I don't know. Let's see tomorrow what happens. Opens up 150, 50, 150, 50. Remember, guys, that is.
And you're getting that off the bottom of the red candle over there.
Yep. That is important. People might miss that. Yeah, people might miss. We don't want to miss that. That's a very critical area. So let's see. Let me see 30-minute chart and see what's happening.
150.61, right, Josh?
Yeah, 150.60. We are not that far, but we are right there. Trying to see. Yeah.
If the market goes up tomorrow, and we can get a solid close above this on a couple different time frames, I might scalp some of these Apple calls above that 150.60.
Hey Josh, on that 30, does it look like a great cup and handle right there to the left? The handle's on the left. Totally.
Where?
So you got the cup, but your handle's on the left side, right? It's just a reverse cup and handle.
Okay, so yeah, anytime you want to look at the cup and handle, I always believe in you need to have the surface flat. flat kind of thing. You don't want to like this spike out and spike this in and stuff like that. Just like a head and shoulder also. That's what I believe in. You need to have better cup. It will always go. So I don't see a handle here yet. Maybe get reject. So let me take a look at 5 minutes. Probably in 5 minutes. No, nothing in this. 5 minutes. Yeah, we still, I mean, right now we are going cup right here. You see this going, but the handle is not there. Let's see, it might get rejected and create a handle.
So I was, and I might be wrong, but you see on the 12th, I'm talking about the 12th in 16th is the handle. It's just on the left-hand side, and the cup starts from the 18th and then to the 27th, right? To the 28th.
Oh, this one?
No.
What difference does it make if the handle's on the left? Does it change anything?
I don't think so.
No. The handle has to be on the right side, guys.
Does it?
Yeah, because we are heading this way. We are not heading this way. We are heading here.
Yeah.
Pull back. Why they call it handle on the right side? Because whenever market pulls from the resistance and pulls and it breaks, it's called breakout. Cup and handle. That's why handle has to be on the right side.
It has to form a handle now, which will become a reverse head and shoulder.
yeah. If you look at that way. Oh boy. But like guys, remember, those patterns, man. They are all designed very well to break and fail.
Not that they are supposed to shake out people. When you have a handle, people will leave, and all of a sudden, with some news event, they might trigger upside or downside also. Okay, that's the purpose of handle.
For that 149.83, are you getting that off the wick of the green candle on the left, at the top of the cup?
On the wick, on here.
Yeah, right there. Yeah, where are you getting that 149.80 or 149.81?
So he's
on top of that green wick.
Yeah. So Jeff is talking about right here. Jeff is talking about right here the cup and handle, and that's the wick. So, but he's counting like this.
Yeah, but I'm talking about that line. Where did you?
This line, this coming from this line coming from the all the way here, guys. That is the daily chart.
That one, but what about the one below it? Just below it.
No, below is right here. Below is from the here. It is coming out from the May 17. May 17. Yeah, right now Apple looks super duper bullish, man. Look at that breakout, man. It's like super duper bullish.
Let's hit it tomorrow.
Yeah, I mean, again, it doesn't mean that, guys, those who are listening, man, I don't want people to go crazy. Always make sure market first, guys. Okay, market cannot keep going every day, guys. You have to let the market go and then we go.
500 contracts, right?
Hey Josh,
what's up, man?
How do you see the open setting up? Like, do you see the open setting up where it just gushes high and then kind of pulls back a bit, or what do you think? I'm looking at Bitcoin right now and I'm like, holy shit! Like,
no, Bitcoin did had a run similar to S&P, so it is running just. It is trying to catch up.
You think it's catching up, huh? Okay.
But you're saying You're saying that the crypto is catching up to the stock market?
That's right. I think so. It is due for a catch up. That's what is.
Yeah, I would agree.
And in the past, the stock markets usually lag the crypto, the Bitcoin.
The SPY moves and then Bitcoin moves after.
So my risk management guys, what they're saying is the reason that you didn't see Bitcoin move up the same way you saw everything else move up last week, well, crypto and Bitcoin, Ethereum, everything else, was because nobody's short Bitcoin. Because the hedge funds who all have puts on SPYs and Qs don't have shorts on Bitcoin. And so the derivatives market doesn't have that downward pressure. It's not going to have the spring back up like we saw with the spies.
Where do you see that death cross? Any indicator or any place where we can see that info?
It's just I'm a hedge eye subscriber, and they track these things. It's one of the things that they put out there last week. If you follow, actually, if you search, I think Keith posted it. Keith McCullough is the guy I follow. He's the CEO. He actually posted that on Twitter. So makes sense, right? That you're not going to get a short squeeze in something that isn't shorted. So.
Mm-hmm.
But yeah, so what do you think, Josh? You think tomorrow morning we get like a pull back off? Because I don't know how to.
No, the death cross. Hear me out very carefully, guys. This is how we lose money. We cannot anticipate and then trade, because the moment we anticipate and trade, maybe you can benefit today, but then we cultivate the wrong habit to trade, and then same money what we made today, we can lose the same money another day. So why not we cultivate the best way? Let the market maker go first, little bit, $1, $2, and then we enter. I wouldn't care about $1 we lost, but at least we have a safety net that they are heading in north and we are also going behind them. So at least we get 20%, 30% profit out of it when we scalping. But going first, anticipation that hey, market looking that cup and handle setup is gonna break and it's gonna fly. This is where we are making mistakes, and that's what all the social medias and everybody posts. Oh, these are perfect breakout. Let's go jumping in. Tomorrow market going to be this and fly, and then market also goes with it in the morning. Okay. And then make a U-turn, and then you see everybody gonna be sweating. So that's why I like. I mean,
that's why I was just because I didn't know if the right move would be to close my micro strategy shorts just temporarily, and then buy back in after it launches higher.
Oh yeah, long term. Okay.
Yeah.
Yeah, right now Bitcoin looks super bullish. I don't know, do you see or not? I was showing Bitcoin is its particular moment is. I mean, again, Bitcoin they bring it down, market maker. So I mean, they also play here too. So we got rejected right here, and right now playing the market, but market is bullish. So maybe spike with the spike market goes. We have resistance here at 3250, 32,500 Bitcoin. If that breaks, then we can go and test this 34,800. And then we might get rejected probably. So right now the SPY has a cycle of bullish. Until that SPY cycle finish, then the Bitcoin can go down. So Bitcoin has a resistance right here, this area. Be careful right here, guys. This is the area I gotta watch.
Yeah, that's one of the reasons I took my puts out longer, especially on MicroStrategy. So my MicroStrategy puts are July 15th or whatever. A little more time, but it'd be nice to be able to get out of the way. Pretty big moves up.
Josh, do you follow, like the RSI for oversold and overbought trends?
Absolutely, why not? I look at my MACD and RSI and I compare, and then I see any divergence coming. That's my oscillator. Also, I look. So I that's very, very important.
Yes. So someone else that I follow just posted that the SPI, the Qs, the Dow Jones, and the transportation, right, which we've talked about, have really rallied in this crazy market, which is a leading indicator. But his post was they never got to oversold over the past 2 months, which is historically evidence of an uptrend for stocks, not a downtrend.
Okay. So right now, you can see oscillator telling me the divergence of my MACD is pointing upwards, and we are heading north right now. Okay, so that's what it's looking like to me too. We are already oversold. That's what he said. Look at this 1.5 month oversold right here, and but again, so right now this is the trend is going upwards, and whenever we run out of the gas. So for example, let me show you here. So for example, in this side, you got to come here. You don't need to look one side here.
Where do you see 1.5 month oversold, Josh?
Right here. Constant. We'll be selling from here.
I didn't understand that. What was that?
March 29th and March 29th, April 29th, and then 20 May. So 1.5 months. We had this is the one hell of a time of the history we had a crazy sell-off right here, constant. We could not even go higher high, you know, I mean lower high, crazy, anything. Yeah, everything was.
Yeah, I felt that.
You said I felt that, right? Yeah. So yeah, you know what I mean. This is never happened like this. You can see like these are all small cycle. This is the biggest cycle. You go back, I can show you anything here. This is the pandemic happened, but that was the one straight downfall, waterfall. But this was nightmare right there. So now same thing here. They tried January to until here, but there's a bunch of cycle. You see this cycle? We went through bull, bear. Over here, no bull. Everything pretty much bear completely. So now they have to do short covering. So they might take it to 200. We don't know. We're gonna see. But right now we got to go one step at a time. Remember, they have to set a bull trap, bell trap. That's how happens, guys. And right now we are out of the bear, out of the things, and is bullish. So we have to be bullish and wait for
the top where you have that blue arrow, the last one, the most recent one. What's that line right there? 429.96.
Yeah. Yep. So the new week starting probably. So let's see what market maker their game plan is right now. We'll see. But we'll go with the market. Let's see market how is looking.
Hey Josh, you have any read on oil or natural gas? I mean, there's been a huge move up over the weekend.
I know you want to short it, right?
No. I was just wondering if you saw anything like maybe even like over in the after hours that had went on with oil like over the weekend or whatever. Just with some of these moves. I mean, 117 earlier, which is for WTI.
Look at the USO is 85.
You guys crack me up when he asks you if he wants to short it.
No, US oil is 117 right now. 117.
Well, Jeff is never going to short it.
No, I think Josh was pulling his leg and he fell right into it.
Listen, I'll short it when Macatelli tells us to.
I like that, Jeff.
He's asking me to see what Josh.
It's going to 160 soon. I'm sorry.
Like he's asking me to see what Josh's read is. So what's the? So is there any levels on the charts that you're seeing that look like next resistance or anything like that?
Oh, right now we
just a little hard to see it when there's like just it's a breakout, and I don't think there's another high point for I don't even know when the last high point for WTI was.
No, we broke this one right here already.
That's Texas Sweet, right?
This is Texas Sweet. Right here, man, is looking bullish right now. Look at this. This is a beautiful chart looking right now. If I go to 4 hours, let me show you. So whenever it's curling like this, is like a look. Every time the trend line is tested and bounce, right? So this is a healthy sign. Every time it tests, it bounce, test, bounce. Now it's bounce, and we need to see what exactly happens. So what exactly happening here is now we need to look at another trend line and see if it is this a parabolic move happening. And man, this is creating another level of support. So now we got to go this way and see what happens 4 hours. So I'm gonna.
Now comparing this to what Oxy's doing, wouldn't Oxy be moving in correlation with this?
I would think so.
But it's not, right?
It's not. Okay. Oxy right here.
Isn't that what we just went over?
Oxy looking the same thing, man. Right here. Look at that. Oxy on breakout and Oxy heading. Oxy has a major resistance, guy. I went through Oxy.
It is moving in sync.
Look at that. Oxy has a major resistance coming in at $72, guys. I would take the money and run if anybody has it.
Yeah. So you want to see what would that line be in correlation with the other chart?
Yeah, I mean, alrighty. Let me see.
Yeah, that's a good idea. Is to chart some of the equities in comparison.
Okay.
But I don't know. I mean, the whole move in oil has not really been about equities. It's been about
So Oxy, if you compare
supply
the
chain issues and all that stuff.
so if you compare the Oxy right here, on the right side is Oxy and the left side is oil. Pretty much trend is similar.
Yeah, I would think so. With that said, if Oxy is starting to reach a point that looks like there's some technical resistance, I mean, maybe you get some resistance. Maybe you get some resistance for oil, but I can't imagine that's what we're looking at here.
Mm-hmm.
Are those time frames zoomed in at the same? Because if I zoom in a little bit further on Oxy, it looks like the exact same movement.
Okay.
Can you do XLE instead of Oxy?
Oh, in this one?
Yeah, instead of Oxy, XLE.
Yeah, same thing, man. This is also flying high too.
What about XOP?
Nope. Yeah, not this one. This one is bouncing right now, slowly. These are staples, consumer staples. But
No, I said XOP, not XLP. Sorry.
XOP.
XLE is the spider.
XLE is the energy.
Yes.
There's XOP and there's XLE and XOP. XOP is the producers.
Yeah, all these so far looks like they have been moving in sync.
Man, no, this one is on a tear, man. This is strong. XOP. I mean, this one.
Yeah, I would imagine that XOP is where like that's Oxy. That's gonna be it's XOM, which is ExxonMobil, and it's gonna be CVX, which is Chevron.
Those are the EMPs, right?
I don't know what an EMP is. You're gonna have to help me out here, oil man.
Yeah.
Sorry, the producers.
Okay, yeah, that's what XOP is the producer index. So, so it's not the refiners. I think XLE has got refiners in it, but XOP is I think it's strictly for the producers.
Mm. Yep. Well, looks good.
So where do you see resistance on the ETF there, the XOP? Where do you see resistance? Where do you see it heading?
Whoa. This one? Resistance we have. We don't have resistance right now. We have way up, man. Resistance are. Let me XOP. Let me go to another chart and then analyze it.
Jeff, you buy more calls tomorrow, bud?
Wait. XOP. Look.
That's a tough one, right? Like I think it's.
I know, dude. Yeah.
But the tough trades are the ones that you need to make, right? So, I have no idea. I mean, what's to stop this train right now? I don't know.
This is music.
They're not going to dump the strategic supply. Probably much more to try to ease the market.
Mm-hmm.
So from this chart, Josh, what are we? 180?
Yeah, 179. Right there.
There you go, Schmuckatelli. 180.
What's it at right now?
Right now, 157. It's a parabolic move. Remember, it's been whenever stock goes like this, like stacking candles. Be careful. It might sometimes it can pull back because it's overextended. 1, 2, 3, 4, 5 days constant. So just a little bit. Just be cautious, guys. Just because of the Biden called Fed and say, hey, let's control the inflation. So
that's what I was about to say is all it takes is one phrase from the president to open up a pipeline because elections are coming up and it could like dump the oil market that quick, just a snap of a finger.
I have seen like he's right, ROJ. So the only thing is, guys, be on the oil side, or whenever anything overextended is very less likely you can make 10-20% profit, but chances of losing also higher too. I understand oil is good, this, but just you care about dollar or you care about oil? You care about the dollar to make, right? So just be a little safer side. That's what I can tell you. Just be a little safe because there's a lot of pumpers are there in this industry in Twitter space, oil mafia. I mean, I would not say pumper, but there's a lot of people go and talk about it. It's going, but you got to be whenever something is overextended, go with the intraday something like that. If you're going to go overnight, you never know when you wake up and damn, this thing can change the other side. Whatever the money you made, you can wipe out. So it's a little risky. That's it.
Aren't the momentum ETFs now buying into energy equities? And so that would be like, I would think, extraordinarily bullish for maybe not small like Canadian companies, but at least for some of the like American, maybe small to mid caps and certainly the large caps. Is that if the momentum ETFs are now repositioning from tech to energy, which by the way, where the hell have they been? If they're doing that now, you would think that would be pretty bullish for those equities. That there's going to be a lot more holdings there. So.
Yep, everything looks bullish right now. I'm not saying no. When it comes to oil, everything is looking bullish. Only one thing is not bullish is one thing worries me is if anything, because imagine right now somebody posts a little tweet about it saying that he put a $250 just to fill up a tank on his in Los Angeles on his Forerunner, right? $250 is a lot of money for just driving, and he said probably 2-3 days you can drive on the fill up. Imagine, man, how much a lot
Gosh, I do that every week.
Dude, but everybody is not millionaire.
I feel like maybe we missed the boat on a lot of the oil plays because I'm looking here at my call for XOP for a leap, and the leap is up 16% for the year. So I wouldn't want to get in right now on a leap, but the XOP itself is up 75% for the year. So oil is definitely making money, that's for sure. But I just don't know what it's going to do in the future. I think maybe this is like, right in the middle. So you're going to be taking a chance,
No, it's looking good. Only thing is just you have to analyze that you really you care about the green, or you care about dollars, or you care about the oil. If there's opportunity other side, I would go and play other side where the safeties are there. Over here, yeah, but if market can pull, if this pull, look at this pull over here, like look at that. Once it pulls back, you can watch out for what this is 1 month process. Look at that 1 month. This is.
I'm sorry, Josh, but that almost looks like a perfect inverse head and shoulders. That whole pattern you just pulled up.
Oh, this one?
Scroll out.
This one, right?
Like, the whole pattern.
Yeah. This is W breakout. So this is.
No. I'm talking about the whole.
Oh, okay. Whole right here. Yeah. This is inverse hold. Yeah.
Yeah. If you pull out all the way out, it looked like a.
So the job is done.
What can happen with Biden in oil? I don't think he's gonna, build pipelines. I just don't think that's his motive or his whole thesis. But what he could do is cut like gas taxes, pay people, right? Like subsidize lower income for gas, which is bullish gas. Like, there's certain things that he can do that's still going to be even more bullish for gas. So that's kind of
no, but
I just don't think.
So you think he's still got
no. Hold on, guys.
Some tools?
So Jeff, when Biden meets Fed, he's not meeting Congress. He's meeting Fed. You know why he meets Fed? When you meet Congress, you talk about, say, hey, I'm gonna give you a coupon. I'm gonna give you this. I'm gonna give you that. I want to give that. When you meet Fed, you want to tighten the screw. That's why you meet the Fed.
So yeah, like my one of my short theses for oil is if the Fed raises rates too fast, too soon, too strong, and that's going to break the whole market, and then of course oil will go down. But if that doesn't happen, what's going to bring oil down? I don't know.
I mean right now huge demand. I'm not. That's the thing. Definitely, is a huge demand, and is summer coming up.
So Josh, kind of what I'm hearing a little bit, maybe you can clarify it, and guys, let me know if I get this right or not too. Sounds like some, that there are people with interest in terms of going long, like actually shares in oil versus just playing the options card. So it's not necessarily just leaps or anything. They may actually want to invest in the shares long term. Are you saying that overall that's a bad investment for them, or for those who are wanting to get in while they, it's still at a relatively decent price, and as the market continues to change and the demand for oil goes up, obviously the stock for oil will go up. So the folks who own the commons are, they're going to fare better than the people who play options, because with options we never know what's going to happen. So, and I don't, maybe if you can clarify that, like if you're playing options versus doing, actually.
Yeah, equity is the best safety. Anybody who's playing options are the most risky item. When you play, I would never recommend right now on this one, because it's very dangerous, because options you are holding melting ice cube. If this, like, look at this cycle, happens here, which is about 3 weeks, 4 weeks right here, and then you become bullish, and then you can't gain anything because you're holding melting ice cube. And then guess what? Look at that. By the time you're 3-4 weeks, your all the premium washed out, even though you bought it like a month options. By the time month get over, and look at that, and then you're all the you basically out of the money. And then the XOP went up right there. You see that, and now we enter, and then same thing will do again in this area, and then by the time you will be holding your melting ice cube, because this is the doubling move.
I typically see like an inverse between like SPY and like oil. So like when SPY and QQQ move in a downward trajectory, it seems like oil starts to pump up.
Yeah. Whenever my thesis of is like safety is the first priority, man. It's not about life. We don't want to be greedy. Safety is a priority. And look, show me any trend where we have a 7 green, 1, 2, 3, 4, 5, 6 constant green days, and are we still expecting 6 another green days on top, or maybe 2, 3 another green days on XOP? Show me here in history where we had like these 6 constant green days, right? So expect to pull back some point of time. People gonna lose floor a little bit. It's all market makers, they control. And on top of that, Biden is talking to Fed. Whenever Biden talks to Fed, that means, hey, let's do this, let's tighten the screw. When he talk to Congress, give me the money, I need money. That's why he goes to Congress. See the difference between Fed and Congress.
So what Josh, what could Fed do on the supply side? What can they do?
Fed supply side?
Oil. Like, how can they affect the supply
side?
Right?
Look, I'll give you one thesis, guys, okay? Excuse me. I'll give you one thesis. They wanted to sell their bonds. They kept the gold down. If they can do that, oil is nothing in front of the gold, guys, because gold is a big thing. Okay, so that's why I would say if they can control the gold, they can control the oil also, man. Just I don't want to scare people.
Now, can I ask you, who was holding oil when it went to zero? Any of these guys talking? Because I was holding oil, and I luckily I got out, and I lost a ton of money, but oil went to zero. And
well, that was a capacity to store issue.
Exactly, but
if we have monkeypox lock us all down, then yeah, I can imagine that again. But
but see, what I'm saying is, oil is so volatile and it's so unpredictable, and that's when I said earlier that we have an election coming up, and we have a president freaking out because they, in my opinion, they're down in the race, right? So they have to do something. They met with the feds today and other things, but they have to do something to get the favor back, from the people. People in LA are paying $8 a gallon for regular unleaded gas. So what I'm saying is, as a past oil and gas investor, it can change in a heartbeat. So basically, Josh is saying, look, you're playing a dangerous game because we're at a top right here. It may go to 180, but tomorrow it may be at $72 because it's such a volatile game. It could change overnight. And I know the things that are going on in the world and everything is looking so bullish. But basically, Josh is just saying, be careful. Just be careful. Don't go crazy on this. You want to take a small position in something, take a small position. Because as a oil and gas investor and lost a ton of money over freaking night, like in a heartbeat. It can change that quick. So I think Josh is just saying, look, be careful, because we're seeing new highs right now, and it is bullish. And I agree with him 100%. And everybody that's talking, it is bullish and it looks great. But sometimes the things that look too good to be true is not that. It's not that great.
The breakout is the fake out.
$67,000 Bitcoin is gonna go to 500,000, and that's how people got trapped. And then those are 68,000 people who bought it at Bitcoin. Imagine right now they're holding the bags, and now when their turn will come, God knows, right? So you don't, every time anything fly parabolic move, oh boy, everybody want to go on social media and say, hey, this is gonna go to double the money and it's gonna go to triple the money. But imagine that people are putting that $250 to fill up a tank. Yeah, that's not acceptable in this. That's not normal, guys. Okay, that's not normal. So what you think government gonna fall asleep and they just don't do anything? I expect something going to happen. If that happens, then what would happen? So that's the only one reason I think, man. Other than that, everything looks good. But again, you always keep in mind the Bitcoin was 69.89, for example, or many other things always was high, and then one day it tanked, right? And same thing can happen here too. Then what? We don't want to lose money. That's my point. If you want to play coins, if you want to be a little small here and there, yeah, absolutely. But playing on a hot high, when something is super hot and high also, that's like you burning with a fire. You're playing with a fire, and
I don't think there's any bull in the oil sector or energy sector that's not cautious here. Of course they're cautious, but it's still moving from the lower left to the upper right, right? And what EU just came out, they're going to stop 2/3 of oil imports from Russia. So there's still more bullish cases out there for the oil trade. But yeah, obviously be cautious. Obviously.
Yes. Yep. You don't want to put everything on that because it's overextended. Anything is overextended I'm always cautious.
And that concludes the U.S. oil mafia discussion.
U.S. oil mafia discussion.
That was a great talk, though. I loved it.
Well, okay, so if we're going to... What about natural gas, then? Because you would think that, like, two energy commodities, right, that are both operational inputs into the economy, is oil going to follow natural gas? Because didn't natural gas get smacked last week? Didn't boil, which I know is leverage, but didn't boil get smoked at the end of the week?
Yeah, that's what they do that too. And let me see.
I just think it odd that there would be a divergence between the two, where oil would remain strong, but nat gas, given all the demand that we have for it, is going to start to break down.
No, man, boy, looking good too. But it's all about technicals, okay, right now. But policy change, if they want to bring it down right now, guys, when we have a bigger headline, when Biden is meeting with the Fed, I would give a big alert, big warning. They don't come out and say, hey, we're gonna do this. They're gonna tell Fed, and Fed has all the instruction, and then all the market maker, they're gonna take their whatever action they want to take, and it can happen, man. So
Josh,
I don't think it's going to happen anytime soon, but
I don't know,
the
man.
Democratic Party has a lot of political pressure from their constituents on natural gas, because it came out that there's more methane that gets released from leaky production, right, when they're actually pumping it out of the ground and storing it, than it actually is good for the environment, compared to like using it, right? So it's not a green source of energy as it was originally sold. And so there's a lot of people, putting pressure on the Democratic Party to actually lessen the usage of natural gas, unfortunately. So I don't think it'll happen in the short term, but in the long term, if the Democrats stay in party, they'll continue to have that pressure to, move the market away from using natural gas.
How about like
death knell for America, right? We are the Saudi Arabia of natural gas. I don't like that's probably the
yeah, you know what? Burn all the natural gas you want, but if it's destroying the environment, people are gonna get
how about nuclear, guys? How about nuclear?
The Democratic Party is like the environmentalist party, so they're the first ones to be saying, "Hey, we're gonna put pressure on this."
How about the nuclear? If they activate nuclear and say let's use that nuclear energy, also that can also.
They just shut more nuclear facilities down. It's crazy. They're totally going away from nuclear, which is crazy.
Mm-hmm. Well, in California, as a plumber, I know this. So in California, they are not allowing new homes to have natural gas in their homes. So that's a fact.
Wow. Okay.
Yeah, it's been shown that natural gas is more destructive overall to the environment than what it was originally sold. And like I'm saying, those environmentalists are putting more and more pressure on the Democratic Party because of it.
I disagree with that because I know a bunch of natural gas guys in the business, you know.
Well, that's what they were trying to sell it as originally, as much more environmentally friendly.
Exactly. So no, there's a bias in there. So I think the facts are, you know, miscued. So I think it's actually a better alternative. And
well, they're doing new surveys now for methane leakage from the wells, and that's going to very much impact people's opinion and the government's opinion once those surveys come out. Yeah, what's up?
What's your substitute? Coal? Dirty coal? Like the worst energy source out there?
101%. Yep, you're right.
Well, honestly, like I'm a thorium guy, right? So, you know, that would be me. But for right now, I totally get the pressures on both sides of the coin, and I feel the pinch as well myself. And so I don't want to see uranium nuclear. You know, I want to see a safe, you know, future alternative, but you can't rely on solar, you can't rely on wind, and you can't rely on batteries to store such. So unless we're going to go like thermal from like, you know, the earth, you know, but these technologies are going to take a long time to, you know, bring on, you know, to the power grid. So for right now, it's going to be natural gas, it's going to be oil, and it's going to be, you know, coal for other places like China. You know, but we're going to have to find some gap technologies to hold us over until we get better renewables, you know, in place. And hopefully one of those is thorium.
I don't know what thorium is right now, but I mean,
well, thorium uses uranium as well, right? But thorium doesn't have the ability to melt down and cause nuclear disasters. So if you want to research it, you can. But I just don't want to go off on a bunny trail.
Yeah, natural gas is the best way right now. But you know that we transferred all. In South Mississippi, we transferred all our coal plants into natural gas recently, and
we have a pipeline going through our land there in Mississippi, and we get, you know, rent fees off of that. So there's a lot of that going on there in Mississippi.
Yeah, you ought to see all the dirt work that they're doing from all the coal deposits and stuff. They're removing it and building big giant levees, and they're watering it down, putting big giant ponds on it, and doing all this aerating and stuff.
You have ultra green countries over in Europe using coal right now, right? Like that's where we're at right now.
Well, the future looks bright. You know, California totally, you know, ran the state off of solar for one day. You know, I think it was last month. And so, you know, we may be able to do more and more of that. But for right now, I think natural gas has got a good future. But just watch out. You know, because the environmentalists are turning and saying, hey, look, there's a ton of methane leaking from these wells, and no one was talking about it, and now they're really pumping up the campaign to bring that to the public's attention.
Hey, you guys, I just have two comments. So someone just posted, I mean, I don't know, I mean, Josh, maybe you know, or someone in the group knows when this Biden meeting in Powell, I thought it already happened.
That's tomorrow.
That's tomorrow. Okay.
And just to put input in there, Janet Yellen is also coming too. It's Yellen,
exactly.
Powell. Now they're really putting their heads together.
Wait a minute, why is Yellen showing up?
Because they're freaking out.
They're really confused on how to manage this. So they know that they need to act differently. And my belief, I've said it before, is they're going to shift.
Okay, so
if they pivot from here, inflation's going to go off the charts, right?
Oh,
so
yeah.
There's only one way of.
I don't know. I mean, I think if they do their 50 basis points this month and do their 50 basis points next month.
That's not the guy's thought right now. You know what actually happening is when you say, for example, you have a tree and one branch is kind of like, you know, getting died out. and people try to cut the branch. You know what Fed does it? They're not gonna go and cut the branch. They're gonna say the problem is in the root. That's why this branch is going weak. So they're trying to feed the root. So right now the problem is the oil is going up. They're not gonna go and say, hey, let me go and feed all the people so they can get their you know, we're gonna give them a check for the gas and this and that. They're gonna say, you know what, let's cut down these people who are, you know, all the oil industry where all the oil people are getting money. They're gonna go and hammer it down. I think, you know, there could be several tools they're gonna use it, because inflation is the main root cause problem is, guys, we have inflation is very sticky. And on top, when the gas price grows, man, the war and China lockdown, and then on top of that the gas price going up, they cannot control China locking down. They cannot control war happening in probably in Russia and Ukraine, but they definitely control the price gouging. You know, they can control that. And I think they are right now trying, you know, teaming up probably, and they might come up with some idea, because man, political, they have a biggest power, man. Nobody, they got the biggest.
And it's going to be positive. The market's going to rally.
It's going to be, no, I think they're going to do price control, windfall profit tax. They're going to come at these companies really hard, and it's not going to do anything to the supply, right? It might knock it down. It might knock it down, but they're not going to open up pipelines. They're not going to say drill, baby, drill. They're going to say windfall profit tax. If you make such and such amount of money,
no, guys, what is the Nasdaq doing right now? The QQQ. I mean, I get these alerts, and what's the QQQ doing right now? The money is coming into it.
No. That's fine. That's the market does different things. You know, you have to understand cycles. We can't be all time bullish. We cannot be all time bearish. That's different thing. Yeah. So the people who become bearish, they also lose money when the market condition changes, right? So that's why we are here to find the direction. Right now the direction is looking north. So absolutely. We also need to find the direction whenever changes the direction. Until that, we have to just wait and watch whatever the bulls and bears are, because always coin has a two side. There's the bulls and there's a bear, right? So you, Angela, you are so bullish.
Yeah, I'm not trying to take a side. I'm just saying, right? I think it's really just.
No, you are bullish. I know you said that you are always on the side of the bullish side.
No, honestly, I'm very bearish right now.
No. This.
Is it Christmas in July? What happened?
No, I mean, I'm really scared of the economy, because, I mean, you know, we do have all
Yo, guys, record this.
No, I testify. It's recorded, yes. I'm an all-time, like, optimistic person, that I think that we can kind of pivot through this, but I'm really scared, you guys. I mean, I told you, my son's going in the Air Force, right? He, like, is getting deployed in 6 months. I'm scared shitless of World War III. I mean, like, trust me, I think both ways. But, you know, I'm just trying to read the headlines and, like, I mean, right? So I just wanted to pop on because I saw that, you know, Yellen is, you know, right? Thank God we've got a third person in the Biden, you know, room that, you know.
All the same.
They don't need Nana's help. They don't need Nana's help.
They
She
need a
fucked this up to begin with.
I'm saying it's a babysitter for
Yellen
Biden.
is just as bad as the rest of them.
Nana's there because they're concerned about what's going to happen if interest rates go up, because the United States is going to have to service the debt at a way higher rate if they screw this up.
So
they have to be careful.
No, I mean, there's like no way that they can't screw this up. That's the whole thing. Like, they can't. So what can they control?
That's the nature of the beast.
Is crush the market. They have to take this market down. But there's no political will to do that. They're not going to raise 1 basis point one day. You know, like they're not going to do that.
Jeff.
But they need to.
You and I are too local. Like, we could have a boxing round.
But I don't know what's going to happen. Like, the way that they do that is by either by QT or by raising rates. And if they raise rates, or QT, which is going to raise rates anyway, then you're dealing with a U.S. 10-year that's going to go, north of 5%. And what do we pay? What is the interest we're going to pay on our national debt with a U.S. 10-year at 5%? right?
Right, if the 10-year crosses the 2-year, we're screwed.
Well, we already did, like, a few months ago.
But I mean, like, it length.
I'm more concerned about the fact that if rates keep going up at the pace that they are, the U.S. isn't going to have the money to discretionary income to fund normal things like healthcare and like the military.
So yeah, I mean, QT is, look guys, okay, one thing I'll tell you about.
Gellin's there, by the way, because someone's got to be in the room to like have the interest of the Treasury on the line, so that there's that input into making any decisions about any of this stuff, because they don't want to have a way high rate.
Someone has to be able to say no.
I think they're going to kick the can.
Well, that's what they always do, and that's their only solution.
If you want to tell me to kick the can, yelling your gal.
Right.
Nana loves nothing more than kicking the can. So
exactly.
No, but how long they're gonna keep doing the kicking the can down to the road, because the road has an end too. So they've been doing last 2021.
I mean, this is the wrong time to do all this stuff. I mean, we've got wars going on. So I mean, personally, I think they should kick the can down 1 year until the wars end, right?
They always sell this to our children.
No, that because of that we are in trouble. That is the reason we are in right now in a deep trouble. If they would have continued this, if they would have taken it up, that's what I said, guys. Okay, the owner of the ship is gone. The captain of the ship is still here, and we hired the same captain who was saying that the ship which was in 2018 and 2020. That's the captain right now. Fed Jerome Powell is still there, guys. Okay, now it's up to you how you analyze it. But my analyze, when time will come, and I will announce and I'll show you that, hey, I said 100 times the captain of the ship is still selling and this economy, and he denied into 2021 to take, he said this inflation is transitory, and now this is not, and we are in a big trouble where we have the big elephant in the room and you can take it out. That's how difficult it is right now. Fed meeting presidents about, it's just, there are a lot of things cooking.
Josh, we all know we're in one. I mean, we've never been here before.
You cannot solve a problem with the same thinking that got you into the problem in the first place.
Yeah, this is.
And that's what we're dealing with. We're dealing with the same thinking that got us here.
I think in the short term, we're gone from 2% inflation. We're going to be higher for longer, right?
Wait, 2% inflation?
Yeah, that's fine.
2% is crazy, and I can't even believe that came up in Waller today.
We're not going to get to 2%. We're sitting at like 8% right now.
That's what I'm saying. That's exactly what I'm saying. Is the expectations of a 2% inflation rate is gone, right? We're going to live with higher inflation, right? We might not ever go back. So there's that, and they could just.
And your true inflation is probably more like 18, to be honest.
They're buying time, right? And that's what they're doing, but they're buying the time is not working. It's not working. So
because the derivative bubble is getting bigger and bigger. It's accelerating the pace of inflation.
And I'm going to tell you what we're going to see. We're going to see windfall profit tax to oil and gas companies. We're going to see, EBD debit cards, for the public, because this is an election coming up, right? It's going to get worse. The government never does anything to help out, right? They don't do the right things. They're never going to open up oil pipelines. They're never going to do Keystone. They're never going to help the situation. They're just going to throw money at it, right? And that's my personal opinion. And that's why I'm like, this is not
They
bold.
can't afford to fix the problems, because if they fix the problems, then they're not needed any longer. They have to have problems in order to have, the illusion that they're needed. They're basically a tax on the government or on the people themselves, right? Because they're really not. They're really a waste. They don't produce anything.
So wow, we live in crazy times right now. I don't know. I was there in the .com. I was there in the banking crisis. I think this is the worst of all of them, possibly.
I've never ever felt like this ever before.
I want to see if the next 4 days are the most volatile.
I mean, I like my calls and puts, but let me tell you, I am really nervous, and it's showing up highly.
I've been during the .com bubble. 2008. I I've been here since the 80s, and this is the first time in my life I have felt this kind of anxiety.
And the media in the public, nobody's talking about you. You guys are following the markets, and that's why you're nervous. But the general public, I don't think that it understands what's going on out there.
Not at all.
Totally.
You know what I mean?
You're absolutely right,
They're going
Jeff.
to wake up one day, and it's going to be the biggest shock of their lives. Something's going to break.
That was kind of like what I was saying. I can't remember if it was this morning or the other day, but 2008, I was too busy studying in nursing school. That was so damn hard that I didn't have time to focus on what was going on, outside of my tiny little education bubble. So I didn't really feel what the people who were involved with the market and everything felt. This time I am so involved with trying to learn and figure things out that I can now imagine the type of anxieties that people have felt over the course of time. But at the same token, everything I'm hearing and the fact that this QT thing is the first time I guess we're trying it, so nobody really knows how it's going to actually turn out, that makes me a lot more anxious because we're walking into the unknown versus something that's been tried and true, and we know that there's a good outcome at some point. But right now we have no idea how it's gonna, come June 1st. Nobody really knows exactly what to expect.
We already tried it.
Hey, Josh?
We already tried it in
Yes.
2018, and the market went down 20% in a straight line, and they had a credit crisis happen where high yield spreads went over 5.
So,
You know what?
Good info.
so my question to the room is, why did it have to do both?
To the levels of what they're doing right now, because again, maybe I was so oblivious to it in 2018 too that I had no idea this was happening.
It wasn't to this level. I think it went on for longer. So they said they were going to just ease off the balance sheet and just let it. They didn't have a balance sheet like they have now, but they were going to start to lower the balance sheet, and it was over several months. And then once that started happening, I think it was December, we had a huge drawdown in 2018. If you just go look out there at the S&P, what it did in 2018, and you cross that over high yield OAS spreads from the last 5 years, you'll see what I'm talking about. They go up over 5, and I think when they got the call from a couple of big corporates that were about to default, which I think it was like over $100 billion they were worried about defaulting on. And that's a big number in a trillion or so space. So that's this whole thing, all of it is a liquidity chase. All right. And the reason we had the move on Friday was because they thought that liquidity chase was back on because we got weakening economic data, which is the Fed, to fix it, which means print money. So it's all a liquidity chase, and it's about people thinking the Fed everybody's doing the same thing we are right now. Everybody's wondering when the Fed's going to blink. And so
I got a question for everybody. Why does the Fed have to start QT? Why couldn't they just continue to raise rates, leave QT off the table for now?
Exactly.
Is that
No. Okay. So hear me out, guys. Okay. So we've been kicking the can down since many years on this one. Okay. 2018, 2019, 2020, and then the pandemic came and we did exact opposite on this one, right? So now the QT and QE difference between these, because of these we have the high inflation. How the high inflation happened? Because of the $5 trillion we poured into the economy in the system, and then everybody got the money and they invested into the different assets, right? So all these the power people got, now that's what it raises up the inflation. Now we, because of that cause, we're not supposed to do $5 trillion. That's what we did QE. Now we can't stop. We need to take the power out. When you inflate too much, you have to deflate it in order to balance it out. Otherwise it's gonna pop. And that's what is right now. We have all these big issue I mentioned. We have so many issues, guys. Not 1, 2, 3, 4, 10, more than 10 I said about it. So, and a couple of them are big, like a big elephant in the room. So this is it's not in our hand, guys, right now. This time is out of the hand, out of Fed hand. Remember, guys, is out of the Fed hand, and we are combination of different years. I don't want to scare people, but this time, guys, is not going to be easy. I'm telling you. You watch out. Because I have gone through different cycles in my life. and I have seen this time this combination.
Josh, I mean, saying it's not easy, well, we all know that.
Mm-hmm. How do you know?
It's much worse right now because of what we've had to endure over the last 2.5 years now. That just made what was 10 times worse. Is that what I mean? Yeah, what makes this time that much more detrimental than what you're saying?
Not easy because of look what's going to happen now. What's going to happen now. Look what with the QT. Then when the QT starts, all the money already is going to start flying. When the QT start, all the treasuries plus the mortgage-backed security comes into the market for sale. When something Fed sells, what happens? They have to collect all the cash from they're gonna suck all the liquidity from the market, guys. It's very, very dangerous QT is, and this is not a small QT. This is gonna be a bigger and.
Okay, so when they suck all the liquidity, what does that look like?
Look like people will not have money. Bank will go and invest money into those all the garbage bonds they're gonna buy. They're gonna buy.
Does that mean like everyone's homeless?
I
know. How do you bring down prices? That's the question, Angela. How do you bring down prices? You bring down prices by having people go out of business. Right?
No, okay.
So you're going to have a contingent in the marketplace that is not going to be able to continue to do business. You're going to have business failures. And that's what happened in 2008, right? So there's only one way to bring down prices, and that's to have people go bankrupt.
Agreed, and foreclose, and like have no. I mean, like, where do you go? What do you do? Like, I mean, I won't go in that. My heart.
Well, that's what Josh is trying to tell us, right? You better tighten your buckle and make sure that you're not spending on things. Well, that yourself is going to be impacted by the greater community.
Mm-hmm. So
can I see MG in the room? I would love to get his thoughts on this. Just Janet Yellen, Powell, and Biden meeting. MG, would you be able to speak to anything, or are you just listening? If he could come
MG, please come on, man.
Hey, Josh, if you want to make a couple of us co-hosts, and that'll open up more speaker space if you'd like.
No, I'm not trying to make any co-host today.
Oh, okay. It's just I'm saying it'll open up more speaker space. It has nothing to do with the co-host factor.
You could move me down. If MG will come up, I would love to hear his thoughts.
Thanks, man. I appreciate. Let me help you. Thanks for your help, Jeff. Okay, let me see.
Yeah, we're only sitting at 9 or 10, so we can always have 12 speakers.
Yeah. By the way, Deathcross and Jeff, I am good at my trading. I'm just not very good with all this geopolitical stuff. So thank you so much for kind of helping me understand a lot more what's going on and how it really works.
No, thank you. So what I noticed is couple of couple of complaint I got it about the following puts on Tesla. You and Tony was on super bearish at when the high alert I gave and say, hey, this is 400 SPY and we are at the really bottom. We understand that Tesla can go to 450, but not every day like that. And there's a lot of people burn at staying on a put because you were on the put, so they were following. That's the reason people are asking, hey, are you still on the puts? So problem is because you are being a co-host, people are feeling like that, oh, she is a co-host, so she's a part of the trade of like you are a trader. No, TQ, when you join, you're not the trader, right? You just jumping in here to trade and learn out of it. But I don't want people to follow just your trade and jumping in and then lose money. My goal is here, if they don't make money, it's fine, but I don't want people to lose the money. So that's the reason I like to avoid hosting co-host people now, because I noticed that because people become co-host, the people who jump in here, oh wow, look, see me co-host, look, TQ co-host, he bought this, he bought that, and people start feeling, let me do this. That's what I'm trying to. I there's a one guy who lost $50,000 on when Gopi. Talking about like 4 weeks ago, and he bought. He shorted the Tesla, or he was buying Tesla. One of the situation. He lost 50,000. Then he quit the trading right now. He paused his trading. He said, no, I don't want to now. So the one guy lost also. So I can just keep talking about this community about good, because there is a people also lose money too. So I need to take care of that. I need to fix that problem. If somebody who is losing money, no, I don't want that thing because of that co-hosting. Somebody buys it because TQ is not a trader, guys. CB is not a trader. See, I need somebody who is more experienced traders. But like Gopi is a trader, right? He's been trading since 20 years. But when he becomes, oh, it's why gonna go to 460, and then everybody listen, oh, so he's saying 460, and then let's go and bang. That's where the problems happen. So let me now manage this community in a way where I don't want people to lose money. When I understand 9 people make money, 8 people make money, but then somebody exit and entry is important here. That's what my right now I'm little bit analyzing that how to manage this, because I know we have a lot of community. There's a lot of people who want to jump in here and have a lot of questions, guys, but we have only 10 space available to talk. So please bear with us. I always try to rotate people and give everybody opportunity to speak, because we will not have, I'll try to avoid a co-host, because of that it can be a dangerous situation. I don't want people to go and jump in and blame, say, hey, these were the co-host, because host and co-host means the equal power to follow. And I felt like that. So I don't have anybody against that, hey, because of he's not trader or she's not trader. It's about not losing money. That's my first priority. If I had to shut down this space, I would shut down, but my goal is not to, that's my karma. I would not allow that. I don't want people to lose money. I want people feedback. I need a good feedback. I don't, if it's bad feedback, I'm gonna come there. I just said $50,000 somebody lost. I felt very bad. The same thing happened with other guys. No, I don't want that, because just now somebody asked me on a YouTube, right? TQ say, oh, are you still holding somebody, John or something? Somebody asked too. So I don't want that thing. I need experienced people. Even TQ, you also announced that hey, please be careful trading. But some people just want to just jump in because they think people are trader here and they're smart. But it's very difficult to hear.
Right. Well, I completely understand, and that's why I always tell people, don't copy what other people do. Again, I have studied Tesla for 2 years before I started doing what I do, and I've never recommended a single person, even on the independent spaces that we do, to buy Tesla. I always tell them to go with something very inexpensive and learn how to options trade before they actually do that. So I do feel bad for the people who may have jumped in and lost money, but at the same time, I'm also the school of thought that we're all adults and we should be responsible for the decisions that we're making, especially if we're telling everybody to be careful on how they invest. Because again, if they're not, they can't depend on one person saying buy or sell. That's not what we're here to do. We're not here to tell people this is the time to buy, this is the time to sell. That's your decision to make. We can just say, or like you, even I come to you for guidance. So if anybody's following me, then they're following the guidance we're getting from you. And again, I'm stop buying and selling based on my knowledge. Once you say it's a good entry point, then again, I don't know what these other people are doing, but if they ask, I answer questions. That's the best that I can do. But if being co-host is confusing people, then I don't want that burden on me either. So I'm completely understand what you're saying.
I stand by her words, 100%.
Yep. Hey, this side topic we have MG. What's up, man? How are you?
Hey Josh, how you doing? Can you hear me?
Absolutely, man.
Yeah, no, it's a great space you have. My only opinion on what's going on with the Biden-Powell meetings is that things must have politically gotten really bad and very dangerous for Biden. I think that the economic data is deteriorating very quickly, and he is essentially calling some sort of emergency meeting with Powell to sort of powwow with Powell to see, what can be done. I think that their initial objective was to stop inflation because it's hurting so many middle-class Americans. But I think that the data is deteriorating so fast, especially in the housing space, that that this was sort of the problem all along. The Fed is fundamentally just trapped. Powell kept talking about the idea of a soft landing or a Goldilocks kind of economy. And the reality is with the amount of debt that we have now at this point in time, and all of the kind of quantitative easing and the balance sheet kind of measures have made it so that we really don't have too many choices. The two choices before the Fed are, do you allow for inflation to run high, which is bad, or if you try to stop it, do you allow for a recession at the very least, and potentially a very deep recession? And those are the only two choices in front of him. And I think that Biden is looking at the numbers and seeing the fact that there's going to be a lot of layoffs coming soon, certainly in the tech space, because unfortunately we have a very financialized economy. Everything is dependent on the stock market. And while the indices have have not gone down very much. The average stock has gone down tremendously. And certainly in the growth sector of the economy, the stocks have gone down, more than 50%, sometimes as much as 80, 90%. So all of these companies are going to start to announce lots and lots of layoffs. And all of these things, I think, are scaring Biden, because when he's looking at the abyss and saying, okay, what are people really going to get upset about as we approach the midterms? Is it going to be, are they going to be more upset about inflation? Or are they going to be more upset about recession, which is essentially deflation? And I think that at the end of the day, politicians are always more scared of deflation than they are of inflation.
I agree.
And so that's, I think, what's going on.
Interesting. Yep, absolutely. And I think I agree with you. And that right now the biggest priority is for the inflation to control, man. Believe me, that inflation is very sticky, and Fed even can do, because they don't have any tools left in their hands, and there's nothing left in their hand right now. This is way out of control, guys. Way out of control. The energy sectors, and look at the GDP, guys. GDP data coming soon. You watch that too. That is another disaster. So if the GDP data comes out, that's what I say. EPS is the most important part. I'm watching EPS, because EPS is the EPS I'm watching very closely. Let's see what happens.
Hey, MJ, real quick, bud. What do you think about why was Yellen there?
Well, I think it involves a three-pronged approach, because we have a huge amount of surpluses due to tax receipts. And right now, the Treasury doesn't have any needs for issuance. And that also has taken a lot of reserves out of the banking system. And so that's caused some liquidity issues for the last 6 or 7 weeks. That was one of the issues that was causing some of the problems, I believe. Bill, if you guys follow Bill, I forgot his Twitter handle, but he's covered this in depth. But basically, that was one source of liquidity drain. And so I think Yellen is there for that. But I think that for these guys, the issue is if they attack inflation, which is very, very dangerous for people. I think a lot of people are very upset, saying, "Look, I have to pay $200, $250, each time I fill up my car." But at the end of the day, if they don't have a job, that's actually even going to be potentially worse for the Democratic Party. And, they don't really have any policies to sort of deal with oil to make it cheaper, or with natural gas to make it cheaper. There's nothing that the Fed can do to address those problems. And so the big issue is that input costs have gone up quite a bit. And so the trillion-dollar question was, can all of these companies pass these input costs to their customers? And as you guys saw, there's been failure after failure after failure in every single earnings of all the retailers. And so that gives you some proof that a lot of these guys cannot pass their costs through. And so that's what I think that these guys are looking at.
I think another thing is, most important part is, guys, remember I tweeted about the 7 hours ago about China banks are getting insolvent. Look at the headline now on CNBC coming in. When I said it 7 hours ago, now the China faces nearly 1 trillion funding gap. Remember, I mentioned about millions. Now is trillion funding. This is banks. So banks are getting insolvent. That is dangerous, guys. When country getting insolvent, banks are getting insolvent in not for having fund. That's not good news, guys. This is disaster, guys. You see that people can see on their screens. China faces nearly 1 trillion funding gap. It will need a more debt to fill it up. That's very bad news.
Hey, MG, can you speak on the Credit Suisse news? Because I remember talking to you before about, could we see some sort of banking crisis over in Europe, and is that possibly why they're moving to remove stuff from the balance sheet and whatnot? Like I believe you had kind of possibly the same opinion. Can you speak on the Credit Suisse news?
Sure. I think that anytime a bank raises money, it's a very touchy situation, because if they raise money, many people might interpret that as that the bank is in trouble. And as you guys know, if anyone has a hint that a bank is in trouble, everybody goes and takes their money out. There's a run on the bank. So they have to really manage that information very carefully as to, why they're raising money. I personally think that these European banks, at least one of them, and it could be Credit Suisse, ran into a huge problem with Russia. They were probably extending lots and lots and lots of derivatives and loans and structured notes that were essentially tagged to Russia or tied to Russia in some way. And the idea that a major European, bank would not be exposed to Russia is not possible. So right now, this is the classic, the water's coming out, the tide is coming out, and we're going to see who's naked, and maybe that's Credit Suisse.
Yeah, but others will follow. Is that correct? This is now a domino effect.
You're very right. It could be a contagion. I know that the American banks were not as exposed, but given the fact that the Russian banks were very cozy with a lot of the Russian operations, they had almost all of them had extensive operations in Moscow. They were, making loans personally to oligarchs as well as to Russian companies, and it was a source of, yield and profitability for them. So you're right. I mean, I think that if other banks are exposed to Credit Suisse, then that could be a domino effect.
And would they have exposure to China as well, MG? Could that be a different problem?
That's less likely. China is actually very, very insular, and they
Is he cutting out for anyone else? MG, can you restate that last sentence or two?
Yeah,
He cut out.
Sure, I apologize. I'm driving in a car. No, China is extremely insular. They have very strong capital controls, and it's very hard for any foreign bank to operate in China. So I don't think that's, I don't think that these guys are directly exposed to China as much.
So, what do you think about like the China now opening up and their GDP is like constantly on a downhill, and then still another quarter probably will be also on a downhill, right? And we are also first quarter we had the GDP down negative in the US, and where second quarter maybe I'm expecting probably would be also because of all this scenario going around. We would if we have a negative GDP. How do you rate this, and how will impact the market? I mean,
Josh, I agree with you. I think there's a very high probability that this next quarter will also be negative GDP, and if that's the case, then that technically means that the United States is in a recession. So I think that's that's probably some of the data that Biden and his team and those guys are seeing. And I think that's what may be precipitating the discussion, because that's a very dangerous development in a midterm election year. I think the Democrats are very worried about that. With regards to China, the problem is that China has always had a two-tiered system. They have an extraordinary amount of debt. They have way more debt than even us as a percentage of GDP. And there's a part of Chinese economy that is very profitable and is very that's that can operate and essentially has a good return on its capital. But then there's also a lot of government corruption and cronyism, especially within the local provinces. And there's a lot of real estate loans and other kinds of loans that these banks have been forced to make that are clearly never going to return their money. So there are, like you said, a lot of zombie banks running around in the Chinese property sector. Now, whether or not the central government comes in and bails these guys out, which they have done historically, that's sort of like the big question right now as to whether or not they're going to do that.
Wow.
I got a question for you, MG. Do you feel that a recession is priced into these markets yet, or not?
I think that right now there's, in terms of what's going on with the equity markets, I think that they're just technical. It's purely a technical market at this point, and so we had 7 weeks of straight down weeks, and so I think that there might be just sort of a technical reasons why things are kind of bouncing, and this is very consistent with a counter trend bear market rally. It's very violent. It's very sudden. There's a lot of volatility. It's designed to shake people out of their positions, both short and long. and there's a lot of sector rotation going on because people are sort of trying to hide and find, whatever seems to work. So for me, I still think we're in a counter trend rally here. But I think that if you look at the bond markets, there certainly seem to be pricing in some sort of massive slowdown. The fact that the 10-year yield went from 320 to 275 in a few weeks, the bond market is pricing in a massive slowdown. That's a big move, guys.
Hey, and can I ask you a quick question, man? We talk about QT and how to price in the move on QT. How or can equities price in QT? I would think that what we'd seen where liquidity has went down is what got priced in, but liquidity is going to go down even more real soon. So how do you think about the market pricing in the upcoming move to QT?
I think that the previous people had it right, which is if you look back at December of 18, I think once QT starts in earnest, especially Josh mentioned that the amount of QT is going to be increased significantly, I think that will put massive pressure on all asset prices, on all asset markets, especially the equity markets. And I don't think that the equity markets has truly priced in the effect of QT. The big question right now is that a lot of people think that the Fed is going to blink and that they're going to make some sort of pivot. That's what everyone is sort of like betting on right now, because the alternative to the Fed, the alternative to inflation is that the Fed essentially breaks something and causes a deep recession. And so people think, given the fact that the Fed knows this, they're going to blink. So a lot of people are interpreting this kind of conversation with Biden as evidence that the Fed is about to blink, or that Biden is going to put pressure on them to pivot. Now, if they don't do that, which I don't think right now, if they see Q3 through, at least for the first 2 or 3 months, I think that will cause things to break significantly. And I think the Fed is going to have a very difficult decision to make. But I think once QT starts in earnest, I think you'll see a lot of pressure on the equity markets.
So what I saw, MG, I was one of the folks talking about 2018. The way I interpreted the move last week, a couple things. First of all, Treasury yields are backing off, which, as you discussed, is an indicator that growth is slowing. But that because we got a negative GDP reading last week, and that was a chase on the blink for QT. It was a front run that the Fed was going to blink, and so that's the way I interpret the move last week. Of course, we were extraordinarily oversold, and there's a lot of there was lots of puts. Josh sees all the time. There's there's puts on just really low SPX levels, just relatively speaking. So my view is that the reason we saw what we saw last week was that front run. Do you share that same view?
Yeah, I do. I think that there was a lot of front running going on in which people are anticipating some sort of pivot, especially after 7 straight down weeks. But I think for the issue that the Fed, I think, does have to weigh is how much of their credibility is going to be shot if they pivot too soon. I think they know that they have to pivot, and so the idea of 7 or 8 rate hikes and they're going to be able to have the Fed funds rate over 2%, I think that's a pipe dream. I think that things are going to break way before that, and I think that the QT is going to accelerate a lot of that. So I think that they know at this point. I don't know. I mean, my guess would be that they know at this point that they can't do what they were previously anticipating, which is all this tough talk of 50 bips the next 2 or 3 times each. One guy's talking about 75 bips. I think that all of that stuff is tough talk, and I think it's jawboning. And at this point, if they do something like that, things are going to really break. And so a lot of people, correctly, I think, are looking at the data and saying, these guys, at the end of the day, push comes to shove, they're not going to risk plunging our economy into a deep recession right before the midterms. And as bad and as distasteful as inflation is, they're going to basically accept, inflation in exchange
Totally.
for avoiding a trade, some sort of recession.
So does that mean when you say back off, do you envision QE, like say September timeframe, or do you see just no more QT?
I think right now they have the opportunity to just say no more QT or delay in QT, which, by the way, they've been doing for a while. QT was supposed to start already by May, so they've already delayed many times. So, the question, if things really break, I think without a doubt they will do another round of QE.
Right here.
Without a doubt. I think the pressure will be relentless, and I think that all these central bankers, they don't like inflation, but none of them want to plunge our economy into a deep recession or depression. So
we're in crisis mode.
They're in a very tough spot. They're essentially trapped because of the unbelievable amount of debt. Just do the calculation in your head, guys. $31 trillion of government debt. If they raise rates by 2%, which is not that big of a deal historically.
$3.7 trillion debt increases if they do that 2%.
Think about that, right? Think about the extra interest payments each year. That's about $600 billion of GDP that's lost. That's almost 3% of GDP that's lost. They can't do it, guys. They just can't do it.
So, do you think, MG? Do you agree with me? Like, they have this, the roller coaster, roller board, and there's a crack in the middle. If you bend left side to balance the demand, you have a right side to the other side is the supply, and that's where the crack is in the middle. So, if they want to raise the interest rate, the catch-22 is like, oh, man, we have the debt, and debt gonna go increase higher, and then the GDP is already negative. We're gonna be another trouble going on. But if other side, the QT, if they're going to start the QT, QT, they have no choice but to start. If they start the QT, what's going to happen? All the liquidity will be sucked out of the financial system. And that's why the Fed came out and they mentioned, hey, look, people can see on the screens, if they can see, read that, look, the scale of tightening, the backbone of the financial system start to crack. If they want to weigh in for 3 months, see how the QT works. If these feel the financial system start to crack, expect the Fed to alter its course. So they are also worried about this damn thing. There's a big crack in the middle of the board, and see the go left side is also there's a problem, right side also there's a problem. So
we don't have 3 months.
No, they said the QT they want to test the water first.
I mean, it would be nice if we have 3 months, but I
no, they want to start with a smaller amount, Angela. They want to start with the 30 billion for the treasury bond, and the 17.5 billion will be a mortgage-backed security. That's how they want to start first 3 months, and they want to test the water. And I guess the reason behind they want to do that because of the election is coming in, and they don't want to have this recession immediately start. Probably slowly they're taking the power out of the people.
Yeah, but as soon as the new administration gets elected in, they're not going to want the Fed to take action then either. So we're on this every 4 year cycle of, oh, you can't take your action, Mr. Fed, you can't take your action. But honestly, they have no jurisdiction over Powell or what the Fed does. And if Powell stays strong and says, you know what, it doesn't matter to me what happens for your politics and your elections, what you need to do is just follow course, and we're going to stay course, and we're going to go ahead and do what we plan to save the economy. So Fed needs to stand up for himself.
Yep.
Yeah, but don't think that Powell's not a politician. He is.
I agree that that's what they should do. Yeah, but then you have to ask the question.
I'm sorry, I didn't mean to interrupt, MG. I'm just saying that the government has no say in what the Fed does. The Fed is under their own control, and the government does not control them.
That should be how it is, but here's the argument as to why that's not in fact the case. So just remember that Powell was elected by Trump because he was supposed to be a hawk. He was supposed to be tough. He talked very tough. If you guys were in the markets back in 2017, 2018, he talked very tough. He was very hawkish, okay? And within a very short period of time, once we got to December of 18, he completely turned around 180 degrees, completely went in a different direction once he saw that he broke things. So that's... you have to explain why they did that, right? Because they have to ultimately respond to the needs of the country, and there is political pressure. that certainly at that time Donald Trump appeared to bring to him. So the question is, these guys, they don't operate in a vacuum. He has to get the help of all the people, who work in the Fed to make sure that his policies push through. And those guys can be pressured also. So, I think that that's true in theory, but it doesn't seem to be the case in practice.
Yeah, but are we just going to have another Greenspan, another head of the federal bank who is like, oh, I was wrong, right? Are we going to have another Yellen, a Yellen that turns into a Greenspan and 10 years later said, oh, I was wrong? Somebody's got to end up standing up to the politicians and saying, no, we got to, save the economy. Forget about politics.
You're absolutely right, but it appears that the person who has to do that has to be willing to risk plunging our economy into a depression. And none of these guys at the end of the day are willing to do that.
They don't have any choice either, man, right now,
So I see Bill. In the audience. I'd love to hear his thoughts coming up.
Real quick, I want to ask MG one question. So MG, do you envision a move in spreads to the same degree that we saw with 2018, or do you think the move in spreads gets way worse than that, and then they act? In 2018, it wasn't like the GFC. The GFC was the worst move I think we've ever had in spreads. But the move, and I guess part of that is there's wasn't a whole lot they could do right in the middle of it all. But of course there was a huge blowout in spreads with COVID. So do you think that we have a bigger blowout in spreads than we had in 2018, or do you think they basically get right there and they're like, oh, it looks like things are getting real?
I think that for me, all of these crises start with some sort of blowout in spreads, and the place where it might start is first of all in the emerging markets. If you look at the dollar is at all-time highs. The Dixie, is higher than it was during COVID, okay, when there was a massive shortage of dollars across the world. So don't forget, every single emerging market country out there has to pay for almost all their commodities in dollars. And so there's a massive shortage of dollars, and there are crises all over the place because of food shortages, etc. Sri Lanka is having riots, Iran is having riots, Peru is having riots. All of these countries are going to have tremendous pressure put, on their kind of food costs and other commodity costs because of both the shortages and the fact that there is a very, very, very strong dollar. So that coupled with the fact that, Deer Point Macro actually covers the idea of the cross-currency basis swap, specifically in euros. The euro economies are in recession right now. There seems to be a lot of credit, spreads blowing out in Europe. And so the big question is, do you have contagion at some point, and does it cross over to our country? So if you look at, both investment grade credit as well as high yield bonds this year, I think this is the worst start to the year in 40, 50 years. So you definitely are seeing credit spreads blow out, but the actual level of credit spreads aren't at the point where people get significantly worried. But that could change very, very quickly if economic conditions change dramatically. So one place to look at, and I'm sure the Fed is looking at it, is housing. So just in the last 4 or 5 months, just think about the mortgage. The 30-year mortgage went from 3% to 5.50. So you couple that with the real estate cost increases across the board in the country, and many people's average payments over the last year, probably in terms of if they were in the market for a home, is increased by 90%. That's got to put a massive pressure on the housing market. And so that's the kind of stuff that I would be looking for. But you're right. We don't have the terrible, crazy credit spreads right now, but that's, I think, what everyone's on the lookout for.
So, sorry, MJ, I wanted to ask you one quick question about it. So we have a total $18 trillion mortgage debt securities right now. Out of that, they'll be slowly, they said they'll be dumping 17.5 billion. They'll be starting dumping in June, and then slowly in September they're gonna double it up to 35 billion mortgage-backed security into the market. In this scenario, how the market would react on that? Because that, do you think that would impact to the housing market? Because lately I noticed about the housing market, if you compare with year over year, the housing market went down, dropped 70% from last year to this month in April month. So sorry, May month. So that was the number. I said, wow, 70% dropped. That's a lot. It's a big number. So what do you think that would impact to the market right now when $18 trillion mortgage-backed security, which is out of that, slowly they're gonna dump. I mean, not the altogether 18, but Fed has a mortgage-backed security to dump in the market out of $9 trillion, whatever the mortgage-backed security they have. How that market would react?
I totally agree with you, Josh. If they did that, that would be very negative for the housing market. That would put much more pressure on sort of an existingly difficult, kind of housing situation. I think Bill's in the audience. You might want to kind of bring him in. He actually doesn't think that that's going to happen. He doesn't think that, that the Fed will actually have to dip into the mortgage-backed securities markets too much. I think they're going to rely primarily on essentially maturities of treasuries to account for most of their QT operations. Hey, Bill, you're on. You want to explain to Josh the mortgage-backed security issue that you were?
Yeah, I mean, I don't think it'll have, at least initially, will have much of an effect because their target is 17.5 billion a month, at least to start. Just their normal, the pool of mortgages that are in the mortgage-backed security pools that they already own, those cash flow about 25 billion a month. That's just, as people pay their principal and interest, even if let's say there's no more refinancing, that part of the market is completely gone temporarily. Just the normal, everybody making payments on their 30-year fixed mortgages, all that cash going into those MBSs comes out to the Treasury at a rate of about 25 billion a month. That's about 1 to 2% of what they hold. And all we're talking about here is the Fed just saying what they used to do, what they're doing now is they're going into the market with that 25 billion and buying more MBS. Now they're just not going to, right? They're just going to let that flow through. But I don't think that affects the current mortgage market that much, mainly because they're, as you said, right, activity's down anyway. So there isn't like there's a whole big supply of MBS that somebody needs to buy right now.
Hang on, can I jump in? Hi everybody. So hi. I agree with you, Bill. Fannie and Freddie are basically the ones who are holding all of these notes, and I've said this countless times, and sometimes in this space and in other spaces. The moratorium is potentially lifted. They are not foreclosing. It's still not happening. And so when it does happen, and because the moratorium is lifted but Fannie and Freddie are not, they're maintaining the inventory, which is basically helping to prop the real estate market, which is where all the money is, and that's also assisting to prop the current, like the market, right? So when Fannie and Freddie do not foreclose, other big banks follow along and they don't foreclose. I happen to know a lot of people who, are involved in that market, and banks can, houses can foreclose and banks can do so, but there's a enormous backlog of properties and shit loans, bad loans, that are just sitting there. But when they don't foreclose and they limit the inventory and they lower the interest rates, then the prices of all these properties go up, and it helps to clear the banks. It actually assists.
Is this like facts you're saying? Because delinquencies are at all-time lows, and anybody who...
No, let me finish. So the point I'm making is... Hang on, Bill, please let me finish.
Oh.
The point is that when they did this, what happened was they limited the inventory, they stopped the foreclosures, they lowered the interest rates. The property values of these properties that were underwater became no longer underwater, so it helped to clear the books. That was my point. So I'm with you. Yes. Does that make sense?
Yeah, I don't think there's a foreclosure problem, I guess is what I'm saying.
But the backlog still exists, and there are plenty of people who just went away. So that's not going to go away. But I'm saying to you that it's artificially held up. And if you look into California, now looking to offer stimulus for people to buy first time home buyers, the real estate market is really they're using the real estate market to prop the entire market.
So, no, but again, let me add it up. So you talking about the Fannie Mae and Freddie Mac, but how about the Fed has the balance sheet? I'm talking about the Fed balance sheet. When they got to shrink it up, they got to bring it to the market, to the open market. When they bring it to the open market, Bill, correct me if I'm wrong. When they want to bring that those security into the market, they have to bring it to the open market. Open market, when it goes, it piles up because those are like maybe.
But they're not bringing anything from the MBS to the market. They're just receiving cash from the bonds they hold. That's it. They're not selling any of the MBS. Not yet, anyway. They might, but at this point, they're not selling any of those bonds.
That's what as per my understanding, they have to bring it to the market, to open market, and that's what they did in 2018. And then the Jerome Powell, the term came out and said, "Hey, stop this and let's get going on opposite directions. Just stop this and do it in 2019."
I think you might misunderstand how this works. They're not selling anything.
Aren't they auctioning loans? No?
No, at least not to start, right? There's two components. There's treasury.
Those are notes, man. I'm sorry, go ahead.
Yes.
So the first part is that there's 30 billion, which is going to go to 60 billion per month of treasury securities, right? Those mature.
Mm-hmm.
So in other words, they're, let's say it's a 90-day T-bill, right? At the end of 90 days, the T-bill matures. The U.S. Treasury basically pays off the Treasury bill to the Fed, right?
Mm-hmm.
All the Fed does is it just credits the Treasury's account at the Federal Reserve and withdraws those reserves. It doesn't affect the private sector at all, right? Now, if the Treasury needs to go back and replace those reserves by issuing another Treasury security, that's a different story. But right now, the Treasury doesn't have need for that because it's been running a surplus for the last month and a half. So it's actually got too much in its reserve account at the Fed. So there's no selling, right? It's just it's like if you owned a bond and it matured. On the day it matured, the Treasury would give you the cash for the bond that you held. That's what's happening. It's not going into the market. And the same thing with the mortgage-backed securities. Mortgage-backed securities are bonds, right?
Mm-hmm.
But they're based on pools of mortgages. Those pools of mortgages, every month, right, on a certain day, everybody has to pay their principal and interest payment for the month, right?
Mm-hmm. Yes.
All that cash from all those mortgages gets pooled and then gets paid to the holders of the bonds, right?
Mm-hmm.
So what's going to be happening here on the MBS side is the Fed is just going to receives $25 billion a month of, from its bonds, right? Principal and interest payments that go into paying off its bonds. All it's now going to be doing is it's just not going to take that cash and then go back into the MBS market and buy more MBS bonds. It's just not going to do that. So its portfolio is just, the term is it's running off. It's just not reinvesting the cash flows anymore. Does that help?
Gotcha. Then why Fed is so much afraid about this? The financial system can crack, and if this QT starts and if that can happen, then we have to be very cautiously, watchful here, and then we might have to start the reverse repo market, probably bring the rate down from. Maybe right now they're offering about 1%, and that's where the $2 trillion went inside and bring the yield down. You think that?
Well, in principle, over time, what QT will do is it will, because the Fed is no longer buying, right, and the Treasury continues to issue whatever it needs to issue every month,
mm-hmm.
It's just going to increase the supply of Treasuries in the private sector. And obviously, in theory, although I don't know that there's a direct relationship one for one, but as the supply of Treasuries increases in the private sector, more supply means that prices should come down, which means yields should go up. So it's an exercise to let yields go back up, because the Fed has, in theory, been with QE suppressing the yields and making them too low. Now, how high will they go? Nobody knows, and that's, I think, the question. But I think that's what you're referring to is what are people afraid of? They're afraid that yields in the Treasury market, along the entire curve, are going to increase, and the cost, and then other important interest rates that are, basically pegged off of what the treasuries are yielding, right? Like high yield, investment grade, all those yields are usually affected by whatever the safest rate, which is the treasuries yield. When that goes up, all other yields will go up, and I think that's the concern is, are interest rates going to go up, and what does the effect of that on the economy?
Bill, can I ask you a question? Would you agree that on some level, and I think you're actually are saying this too, but the restrictions on Fannie and Freddie to like the whole moratorium and them restricting these foreclosures from happening, and also the lowering, but now increasing of some of the interest rates, the Fed increasing the interest rates, or the banks increasing the interest rates, I should say, that's a regulation on trying to assist in correcting like the markets, right? Because real estate's where all that money is coming from, and so the banks are doing their best with the real estate, which is their largest assets, to try to push it in a certain direction.
Yeah, I'm not sure specifically what you're asking. I mean, the reality is banks really don't hold mortgages anymore unless they're, non-conforming. Most conforming mortgages are basically held by,
Fannie and Freddie.
Right.
Yeah.
The banks only service them, right? They're the servicers. They're the ones that sit in front of the consumer of the mortgage, or the holder of the, and they're the ones who basically interact with them and say, okay, send them the statements every month of what they're supposed to pay. But that money goes into these treasury, MBSs. So I'm not sure what you're referring to about.
I shouldn't have said banks, but I'm saying like them in terms like regulating the some of the inventory, and by regulating some of the inventory.
I don't follow it that closely, so you may know more than I do. I just find it hard to believe that delinquencies and foreclosures are a problem, because rates have been really low, and anybody who had a problem had both rising equity in their home and lower rates and could refinance their way out of a problem. The only issue down the road will be if people start losing their jobs, right? That's when, you could start to see foreclosures, right? Because now they'll struggle to meet their payments.
The values went up, but if these people stopped paying up to say 3 years ago, 2.5 years ago, it doesn't matter. And not only that, but you're talking about a backlog that still goes back to 2006 that is not done being foreclosed on. I guess that, and I don't mean to speak that. Yeah, I don't mean to get excited like that, but it goes back. It goes really far back.
Yeah, I know. I don't know how much of that is left though.
Oh my, dude, there's a lot left. It's still foreclosing from 2006. I'm telling you.
I believe you, but I mean, I don't know that there's a lot of that left. I mean, I used to watch most of that wasn't even Fannie and Freddie. Most of that was, subprime, right? That was in those securitizations from 2004 and 2005. I mean, I haven't looked at those pools in a long time, but I mean, they're down to like 1 or 2% of what they originally were, right? If they originated like $100, there's maybe $1 left of mortgages in those pools. And
okay, so if you go onto any auction website and then you go into the registry and you look at when that loan was originated, the majority of the loans that are foreclosing, even today, are the loans that are from 2006. And everyone says that it was 2008. It was really 2006.
No, I believe
they're still being foreclosed.
The securitization market shut down in 2006.
Yeah,
you couldn't securitize after that.
Yeah, so I'm just saying that backlog wasn't even done 3 years ago, and now even if some of the obviously what I was saying before was like, so of course like the prices are higher now, so some of these properties are pulled from underwater, but there's a lot that, I mean, a lot of this is, I'm just saying that like they're doing their best to regulate some of these loans in the real estate market, but there are still plenty that are backlogged that they'll have to bleed out slowly.
Hey Fitz, my brother owns a real estate and mortgage company in Florida, and I can tell you, although there might still be some residuals from basically the prior to 2008 meltdown, it's a small percentage of what that was. It's not something that's really significant in the current markets. But I agree with Bill. And I think the big kind of shadow coming up right now is if we see a major spike in basic unemployment. And we're already seeing part of that. But that's what I'm mostly concerned about basically people losing jobs and all of a sudden not being able to pay an inflated mortgage they took on because they overbought or overpaid on property.
Right.
I'm in the business, so I'm telling you that it's true. There's a backlog. It's a huge backlog.
We're not disagreeing with you, Fish. We're just saying that it's probably relative to the total size of the mortgage market. It's practically insignificant now.
It's not. That's okay.
That are still being foreclosed.
Well, Chris, I'm not sure what part of the country you're in. I mean, I know. So I don't know where you're in the world, in this country, what you're seeing. I know in certain markets, like in Florida, where my brother is, in California, where I am, it's not a significant percentage.
Let's move on from this one. I see General, I guess, has his hand up.
Yeah, guys. Okay, so I'll make it quick. Yes, interest rates did go down significantly. And yes, values of properties did go up. By the way, I own a real estate company in Hawaii, and I've been invested in real estate since the 90s. But what we failed to discuss in this call is that many of those individuals who had an opportunity to refinance their home when interest rates were down and values went up were already sequestered, they were laid off, whatever the reason was, they were not employed in 2020, 2021, or they had a deferment on their mortgage. Because of that, it precluded them from being able to refinance. So their only alternative to get out of that situation, once that 12 months or 24 months in some cases lapsed, was to sell the property. That's where you had this new wave of ownership coming in, but they were coming in at top dollar, and they were coming in based on what their income was, not having lost their jobs. So yes, we are going to see a huge downturn in the real estate market if the current owners lose their jobs, but we're also going to see a huge downturn coming in for those who couldn't refinance during the interest rate dips.
Yeah, those are the two good points actually you just mentioned about it, because when most of the people won't be able to refinance as the rate goes higher and higher. And I've been talking to my few friends in who they are in a high profile on IT, and they are thinking that the hiring is right now slowly getting tight, though they are not getting the right candidate they wanted. But slowly I think in IT is the area where a huge demand in terms of hiring. But again, right now slowly they are right now tightening up. So there are certain sectors right now overall, like if you analyze maybe a more consumer discretionary, maybe a staples area, those are the area where we might see a freeze in hiring, I guess. And that slowly will impact to the earnings, and those numbers comes out. And then always we need to watch the data, labor data. I did notice one of the chart I tweet about it, that the labor data the graph is slowly grinding higher. Though right now it's too early, but I guess the market is do watch that labor data. And I think if that's slightly, if they feel that there's a crack in the on a foundation, then probably slowly the labor data, where Fed is always dancing on the floor about labor is huge demand and economy is strong. But the point we need to remember, the economy is not actually, call it strong. Why? Because we whole economy is on steroid of putting $5 trillion into people's pocket. Now because of that, we have the inflation right now so high that we can't even take their money out of the from people's pockets. So that's why we have the high inflation right now, which was outrageous mistake we did. Now the second thing is the labor data is the one which, if that comes out bad little bit here and there, slowly, and I notice on Amazon is right now subleasing their all the few locations, plus they are laying up the peoples now. One friend who is very close to in the security side in Amazon, he was telling me in the New Jersey area. I said, wow. So slowly started happening as the Carvana laid off 2,500 people, and this is the one side of the thing. But I think it will pile up as the earning come closer and closer. So second quarter earning probably comes in closer. We might see a more. If that happens, then we could be in a trouble, I guess. Fed could be in trouble.
in the real estate world, we're about 14 years overdue for a correction. I saw this happen in the 80s. I was a really young child in the 80s, but I studied it in the 90s when I started looking into real estate and bought my first. We had it obviously in the mid-2000s. We're about 14 years overdue. And, some may scoff and be, skeptical as, well, what does he mean by overdue? It's not a given that there's going to be a correction. Well, it is. It is a given that there's going to be a correction because that's just how the global economy works. We inflate to the point that we can't inflate anymore, then we have to deflate, which is the recession. We go down slowly enough to where it doesn't cause a depression, but we have to. You can only inflate so much before that balloon pops. Nobody wants, because we've seen it happen in 2008, wants the balloon to pop. So we've got to slowly release the pressure. So that's where we're at right now. That's what, obviously, we've been talking about for the past couple hours. The Fed is trying to figure out how do they balance that. But what we're going to see, hands down, and I've seen it 3 or 4 times in my lifetime, what we're going to see get hit first is real estate. It's already happened in China, okay? It's already happened to other economies. Now, obviously, there's a war in Ukraine, but you can just consider their real estate worth 0 at this point, okay? Now it's happening, or it will happen. It will begin to happen in America. And you're probably going to see California being the first to get hit, then New York, then Texas, and so on. After that occurs, in my opinion, from my experience and what I've seen, it will take about 5 to 6 years for it to get back to par levels where we're at right now. In my opinion, sometime between this year, December 2022, and June to July of 2023, we're going to see it peak. Okay, some areas have already peaked. Days on market are beyond the norm, and they're going to start, sellers are actually bringing down their prices. But in my opinion, nationally, we're going to see it sometime between December of this year to June, July of next year. It's going to peak. Then it's going to take about a year and a half of it sliding down. So that means 2025, in my opinion, is when we'll probably hit the bottom. That is going to be the time for everybody to get back into real estate if they're cash heavy. My plan, my personal plan for our family, not financial advice. And like I said, I've been in the real estate game for a very long time. We already started selling all of our real estate holdings, our real estate assets. We're getting cash strong. We're loading it into the stock market because my other experience shows me, because I've also been in the stock market and just as long as I've been in real estate, my experience shows that it only takes 6 to 9 months for the stock market to recover, to come back to par levels, because those are tied to Social Security, it's tied to 401k investments, it's tied to basically our most senior citizens who have to have a higher value in their stock market, otherwise they're destitute. So the stock market generally comes back within 6 to 9 months because industry starts loading up on value stocks, growth stocks, whatever it is. They start taking things private that used to be public. That's where you're going to want your money during that 5 to 6 year period when real estate is trying to recover. And then in 2025, that's when you start leveraging your stock portfolio. You don't sell, in my opinion. You don't sell off your stocks, but you leverage it. You get a loan against it, and then you get back into real estate. And that's how I've been doing it. That's how that's how the people who follow me, I can't give advice. I'm a real estate agent. I own a company. I'm not a stockbroker. I'm not a financial advisor. Unless you're a client of mine, and even if you're a client of mine, I can't guarantee you anything when it comes to real estate values. But this is what the people who follow me on YouTube or Twitter, they've come to realize that, hey, this does make sense, and this is the route we're going to take as well. So hopefully everybody comes out positive in this situation that this global economy is in. But I'll give you one piece of advice, and I use that word sparingly. I rarely say advice. One piece of advice: watch out for companies that are buying real estate holdings outside of America, specifically in country, and I'm not going to name any countries. You just got to read between the lines and understand and listen to what I'm saying here. Specifically, companies that are on our stock markets that are buying real estate in countries that our country, America, could possibly sanction or has, you know, some type of a political stance against for whatever reason or another. And if you don't understand what I'm saying, just look at some of the companies that are getting delisted from our markets. That's it.
I've seen what he's saying firsthand. I literally know exactly what you're talking about. But one point I'll make, I agree with you, man. Well said. I think that an interesting thing to note is looking at the California right now offering stimulus to the, when you say California will be one of the first, look at them offering the proposed stimulus for first-time home buyers to try to potentially prevent what you're discussing. But also, I would just point out again, when they start to foreclose, that is going to be such a noteworthy date. When Fannie and Freddie actually open these properties to start to foreclose, it is going to be a noteworthy date. But generally, I'm seeing those style buyers, and I saw it actually months before events happened, where they knew that money needed to go from one area to another, like major buys. So I agree with that.
1 second, I'm gonna add a couple of things about general. One thing, remember guys, in 2000 when we had a dot-com bubble started, at that time we were on the top of the peak, right? And then we started gliding down. Those who are looking at the YouTube, guys, I'm just wanted to add it up, guys. When at the top of the peak, to come back when the market tanked, and to come back to the same level, you know, it took us 7 years, guys. Just to remind you, from 2000 dot-com bubble happened, 2021, 2001 and 2002, and then we came back in 2007 to come to the par level, at the same level. It took us 7 years, 6 to 7 years. Then again we tanked the market into subprime 2008. Then we came back to, so SPY came back from 154, so it from 2007 I would say, to come back same level 2013, again same period, 6 to 7 months. So be careful, guys, those who are listening or something, who wants to say 9 months, 10 months come back. No, guys. Why? Because that's what I teach here, guys. Remember, we are combination of 2000, we are combination of 2008, we are combination of 2018. All the problems you combine, we are into that deep trouble in this 2022. If you ask me why, because we pumped $5 trillion into this economy, which was not needed. You got to have the proper GDP going. Otherwise, people can just sit down home and you just feed them. You just print the money and give it to them, and that's it. You're good to go. You don't have to worry about it. We have to have people go to the work to generate and work harder to get paid, and this is how the economy is supposed to work. So, but we did 5 times more money, you know, even if you compare with the 2008. So this inflation what we have created is a big time, guys. It's a really big time, and that need to be deflated, and it's not that easy right now, because
lots of questions.
Yeah.
Hey, before we start with a little bit more questions, I just want to make sure that everybody who's listening knows that you can trade live with Josh Monday through Friday during the trading day, all day long. So make sure that you give Josh a follow and you're ready to come in and watch us trade all day long. And also, for anyone who's interested, I posted the earnings coming up for the week up in the Nest, and it's broken out by ticker. So if you want to know which tickers are trading or giving earnings on what day, they're right there in the Nest.
All right, so Joseph, you raise your hands. It's been a while, Joseph. Couple of Josephs, right?
Yeah, Josh, how are you?
Good, how are you?
Hey, Josh. No, I think
Joseph or Joseph? Which?
I think I was a little further ahead of you, Joe. As far as real estate goes, you know, I recently sold my house, and I was invested in real estate through my 401k, my self-directed IRAs. Okay, and I recently sold, and part of the reason why is because this market has been on a tear, and my real estate is in Florida, and I think I sold what I'm going to call pretty close to the top at the moment, because with interest rates going up,
you got basically you reduced the cash buyers right now. There's been a lot of speculation. There's been a lot of individual people that have levered up. Okay, yeah, the BlackRocks of the world, they bought chunks of houses and a couple other companies. Why? Because they want to make this a rental society. But I think along with that, there's just too many individuals that their eyes, it's like your eyes, when you eat with your eyes, right? They got gluttony, I think, and they bought property after property, borrowing, continually rolling, thinking that it's never going to end. And I've been through the mortgage-backed security time. I'm not exactly young, and I remember that time. And I'm not going to say that it's going to be as bad this time. I don't think it will be, but prices are going to pull in here. They're going to recede. I'm getting in the mail and phone calls on some of my property. They want to give me money hand over fist, cash out, this and that. Right? The time for that was a couple of years ago, not now. I think we're at a precipice here that we don't know which direction the market's going to go, and it's good to be a little more liquid. I do concentrated positions in the stock market, but I own 3 stocks, okay, in 3 different distinct fields, and I'm doing well in all 3. But as far as the real estate, I think at the top, it's okay to sell.
So can I jump in here real quick? I just read something where Australia residential real estate market is $9 trillion, $9 to $10 trillion, which is, I think, more highly valued than the rest of the world's GDP, excluding America. How is that for bubble? Could anyone speak on that? General, can you speak on the Australian housing bubble there?
I really couldn't because I've never been to Australia. But yeah, that tells you something. That's a big red flag right there. If their entire GDP if their entire real estate market is greater than our GDP, I don't know. I don't know what to say, man. It's a huge red flag to me.
Wow, man, the real estate market, I think that
Guys, I've been listening. I'm sorry to interject.
Yeah, go ahead.
Are we gonna fact check anybody's statements? Because I think General might have misspoke. Australia's housing market is not greater than the U.S. GDP.
I never said that was me. I said every other country besides.
I know what you said, Jeffrey. Hang on, I'm not calling you out.
Okay.
But what General said the U.S. GDP. And then earlier he said that we are in an overdue housing bubble correction since 14 years, right? Correct me if I'm wrong. That puts us back to 2008. We were in a correction in 2008. Then to the point of equities, 6 to 9 months for recoveries. I'm glad, Josh, you kind of interjected and helped us with the timeline. That's a best case scenario. So everybody who gets a speaking role here, I listen to you guys get up here and banter. No, this is a big room. How many people? Hundreds of people. For the sake of everybody listening, the host, and I'm not singling you out, Josh, somebody interject and fact check these people, because people are getting an audience, just building up followers, and they're adding zero value to the room. Misspeaking data. That's it.
Yeah.
Thank you.
Yeah, DK, I agree with you. One thing that's not been talked about is the fact that there was a correction of real estate at the beginning of basically the pandemic. I lived in San Francisco, and I saw dramatic changes in real estate in our state and around the country because of how people wanted to live and where they wanted to live. Also, it's very disingenuous to compare real estate in the United States to real estate in China. Real estate in China is very strange. People buy properties and housing in China they have no intention to ever live in. And so they're not even built to be lived in. They're only built to basically be lived as a status symbol. So when you're looking at areas like China and the United States, it's an apples and oranges because it's such a very different reason why you would ever buy real estate in China. And I'm not saying that some housing in China isn't livable, but a great deal of it isn't. So when you're looking at the 2 different markets, they're not the same thing.
Okay, a touch base on DK and a touch base on Joseph. Number one, I didn't say that it was Australia had a real estate value that was greater than our US GDP, what I thought I was saying was repeating what somebody asked me. I don't know if that's a fact or not, so I wasn't trying to put that out there. I was answering a question. That's number one. Number two, if I said 14 years overdue, I apologize. I think it's pretty common sense what I was trying to say. We're 14 years since a correction. Okay, that's number two. Number three, I'm not comparing American real estate to Chinese real estate. What I said is to watch out for companies that are looking to purchase real estate in foreign countries, which we, as Americans, our government, would be sanctioning. Because if you have a company that's buying factories in a foreign country that we have a political stance against, who really owns that factory? Is it an asset that's going to be trickled down to the investor, the American investor, or is it an asset that's going to be seized by a foreign government and stripped from your value if you've invested into the wrong company? That's the question I have.
Yeah, but General, that's the thing about China, for example, is that a U.S. company can't have 100% ownership there anyway. It's illegal.
Thank you. You said it. I didn't want to put it out there.
No, but it is. It's illegal for a U.S. company to have 100% ownership in a company in China.
Okay, so now that it's exposed, I'm going to just put it out there.
Yeah. I mean, that's just a fact. So,
yeah,
I mean,
but bottom line is there are a few companies that are posing as American companies that are on our Nasdaq stock exchange right now that are actually Chinese companies that are putting up PR press releases that are stating that they're buying Chinese factories. And you got to ask yourself, how is it that an American company is actually buying a Chinese factory when all the executives are Chinese and the owners of the 54% majority of are? So that tells me that could be a Luckin Coffee situation. And again, I'm not going to say any particular.
No, but generally, I mean, most people, I would hope that most individuals here are taking a moment to look at basically where companies are based out of, you know, and so if your company's based in New York, you know, versus your company is based out of Beijing, there's probably a difference. You know, so, I mean, it's always part of your due diligence to kind of know who you're talking about, who you're working with.
Well, what they're doing is there are a lot of companies right now that they did reverse mergers to get on our Nasdaq. Okay, and I don't want to put out any particular name that I'm thinking of off the top of my head because there are some innocent investors right now that are still tied up into it. Okay, you can just look through my Twitter page. I actually bought 59,000 shares of the company when they first did a reverse merger, and then they bought a Florida factory. They are listed as a Nevada company. I got out of that company in January because things just started not making sense to me. That 54% ownership was from a foreign national. And I know how the government works in that country and how our investments as Americans work with that country. And about 2 weeks ago, they recently bought a factory in that country. And I was like, that was the hugest red flags. And unfortunately, that's not the only company that's doing it. And I feel like there's a conscious effort right now to siphon out money from American investors into foreign countries. And I'm just saying, everybody just needs to be very careful with what they're invested into.
All right, cool. Hey, I wanted to just say, I just wanted to shout out to DK, and not in any direction or anyone that he was referring to, but I think that's the kind of stuff we want to know. Like, it's cool if we can, disagree a little bit. And so DK, it's good to hear. We don't all have to move in the same direction. So yeah, man, if you think that something is not the way that is being conveyed, maybe we're just not saying it right, or someone's not speaking it the right way. So well done. I like to hear. I kind of like to hear that. So
go ahead, Gary.
Yeah, sorry. I just wanted to touch on the housing issue. So I put something up in the Nest, and this is actually the way that this was aggregated was it was weighted with time varying purchasing power parity adjusted for gross domestic product. So what that means is obviously different nations are basically what you're doing is you're converting their GDP to international dollars using purchase power parity rates. So the base year for this chart was 2011, but if you actually look at housing markets, they're showing extreme signs of exuberance.
it's Canada. Australia is at risk, but I mean Canada is what are we looking at here? Almost about almost 3 standard deviations above the mean. So I actually think if we're talking about actual, if you were looking at real estate as the size of GDP, right now mortgage credit's about 1.9 trillion in Canada, which is, I believe, close to 100%, not if over 100% of GDP. I think Canada's GDP is like maybe 1.7, 1.8. So Canada is actually a much larger, or at a much larger risk of housing bubbles than if you look at the rest of the countries on the chart. So that I was just trying to shed some light on that.
Okay, 3S's is here, man. He knows Australia more than anybody else, huh? What's up, man?
What's up, kids? How you doing, Josh?
Good, man. How are you?
Good.
What's
Listen,
going on?
hey, thanks for picking on me. I just wanted to clear one thing up, and this is basically a rule and a fact, okay? Right. From Alibaba on down, 100% of the Chinese companies, I don't care if they have offices in Nevada, New York, or where they are, okay? Right. The U.S. shares that you own, okay, are called variable interest entities. They have 0 property rights. 0. Nothing. They are not stocks. They are basically a roach motel. You put your money in and you get nothing in exchange. 100%. It is illegal in China for a foreigner to own a share of equity. I highly recommend that you do your research if you're trafficking in Chinese stocks in particular. This is a fact. This is not an opinion. Okay? So the Securities and Exchange Commission has warned everybody recently, be careful from Alibaba on down. Okay? You own nothing. 0.
Absolutely, man. I think I agree with you, and that's what we also mentioned about it. We do not want to get involved into any Chinese stocks. I mean, yeah, if you want to do scalping, trading, day trading, that's different strategy. But when it comes to the overnight holding any positions, man, you can wake up in the morning and you might not have the floor underneath. That's what happens, and it can happen, man.
Yeah, my RSX stock calls are making that fairly clear. Like there's your proof.
Gotcha.
Looking at the screen, who is that was speaking about the Chinese stocks? Because I gotta add that person as a friend.
3S's.
3S's is always there.
Yeah. If you send me a DM, General, I'll send some information. Not tonight, it's getting late. Tomorrow, I'll teach you all about it. Okay?
Sounds perfect, because I'm gonna need you to help, wake up some of my investor friends that believe they're in a good company that are just gonna get siphoned.
The best thing what people need to do is, guys, just come on over. I'm always here live 10 hours a day. 10 hours a day. Just come out here and learn free. Everything is free I give out, guys. And not only just technicals. I give out financial, physics of finance. Then I give out all my technicals. I give out geopolicy. I do all give out free to everybody. It's free, guys. Discord, YouTubes, come to Twitters, everything free, and then they can learn out of it. This is how we talk about China. We talk about everything. We talk about technicals. We talk about all the different sectors, and it's live streaming free, man. I share my screens. Everybody can see worldwide, and we discuss about everything. All the Chinese companies, man, we don't invest. We invest. We do scalp. We in and out. We don't want to hold anything. You got in this market condition. What I teach here is you got to make sure the company's foundation is strong. The financial foundation has to be strong here in order to invest into this economy, because these market conditions are not normal conditions, guys. Right now, you have to have the foundation. Then only you can have the taller building. In another word, is the price. The higher the price of the value, the EPS is going down, and you have the building on top is too tall. that one day gonna collapse no matter what happens. And this is how the market is working on. It is not about cheap, that hey, Baba was $350 and let me buy at 199 because cheap. No, I've been shouting on loud and telling, hey guys, be careful here. Look what happened. People are looking for cheap. Oh, Baba is 150, Baba is now 125. Look where it is going. It's not just the Baba, it's many companies, guys. I've been talking about PayPal, I was talking about Shopify, talking about everything from the top. They were at the top. Netflix, man, $650. My friend wanted to buy for $650. I said no, that's gonna go to the crap hill. Look what happened to the Netflix. People wanted to buy Facebook. People wanted to buy PayPal. Oh boy, people wanted to jump in every bandwagon. And look what exactly people want to buy Tesla. Man, I was the one who used to talk about Tesla, and people used to jump on the bandwagon of Tesla like you cannot imagine, all blindfold. Look at that, see what's happening. You got to have a financial foundation, man, before you invest into any of the stocks. That's what I teach here. We can't just simply close the eyes and go because market first. Has to be market first, not your stock, the company. There's a EPS, there's a multiply. You got to make sure the forward PE ratio also support. You can't just simply go and just pay 80 time value. No way. 70 time value. No way, Jose. This time right now is going down. The PE ratio is going down because EPS is going down. So slowly, no matter what, slowly it's gonna come down, guys. And that's what's happening.
So we had George Noble in the room, but I think he left. I would have loved to get his opinion on the meeting tomorrow with Janet and Powell and Biden.
Mm-hmm.
But I see O'Hare in the room. I'd love to, if it's okay, Josh. I'd love to
absolutely, everybody welcome, man. This is community for the public. Everybody can welcome.
We started to get some great people in this room, and I'd love to hear from them to prepare us for tomorrow. So if O'Hare, do you have an opinion on what that meeting could do to the market? So I would love to hear your opinion.
And for real fast, hey Ace, I have a question for you while you're up here. What are your thoughts about energy? I personally keep seeing the idea that oil, coal, natural gas are going to keep pushing against resistance for at least the next couple of months. Do you see anything that's different?
Look, excuse me. I'm a huge commodities bull. I have been for a decade, right? I'm in the commodities business. You know the industry I'm in.
I know. That's why I asked you.
Yeah, no. But I mean, I'm just saying, like the problem that I have with oil, right? There's two or three fundamental issues that I have, right? Is that literally oil could triple from here in a blink of an eye because of policy. Okay, not so much coal, not so much natural gas, but oil. Because of this administration and the failed policy and the deliberate attempt to put the oil and gas industry out of business with this ESG scam, right? So that's the upside. It's monstrous, but at some point you'd think that these guys would snap out of it. I mean, we are in an election year. I know some oil and gas CEOs that can turn on 500,000 barrels in one day of production that are being held back by the administration. There are 6 or 7 refineries that are being held back from reopening because of the administration. So in as much as there's this picture perfect fastball for a double or triple in WTI, there's some very small changes that can be made to reverse the course materially. I'm not saying it goes to $50, $60 a barrel, but it definitely can go under 100 quickly. So that's the first thing. The second problem I have with oil is that I am of the belief that we're already in a recession. Whether the print comes to roost at the end of the month with a big negative number or a small negative number or a small positive number really doesn't matter to me. There's massive demand destruction across the board. Look at retail, look at everything is getting smoked. So it's really hard to imagine that if these guys pull their heads out of their ass in the White House and they make a couple of small changes going into an election year and we're going into a recession, it's kind of like betting on the favorite and taking the under. It's a tough bet because if we are going into a recession like that, you know, we've never seen oil do very well in a recessionary time. So it's a bit of a mixed bag, but I don't think, all things being equal, I don't think anything has the upside in it that oil could potentially have from here, with the exception maybe to gold. You know,
yeah, and I guess from my I guess from my perspective, I'm not even looking at a triple. I'm just looking at basically oil continuing to keep pushing at that level of resistance, keeping at this kind of this level of high we're at. You know what I'm saying? So,
did you look at it a few minutes ago? It's at 118. I think it's breaking out of the resistance that you're talking about.
Well, yeah, totally. But 118,
right.
118 is something to 150. You know what I'm saying? A 118 is at 150. So to me, it's like it's at that kind of big resistance level. And regarding policy, I think as long as they have Klein running the White House for basically Biden, I don't think there'll be a change. You have too much of the far left running the White House behind the scenes.
Bro, by the end of the week, we could see $10, $11 a gallon in California.
Absolutely. You're going to see price controls come in.
There's no such thing as price controls. You can't force a company to produce and sell a product.
Okay, excuse me. The windfall profit taxes, whatever the Democrats' planned are to help, you know, the hurting civilians from oil.
Yeah, that would get right away with basically a lawsuit.
They lack the political will of putting more barrels on the market, right? So the only way that they're going to look at it is go directly at the CEOs, right?
It will have a negative. It will have a reverse impact. If I'm a producer of a commodity, and all of a sudden you come at me with that horse shit, I stop producing.
I 100% agree with you.
Exactly.
I 100% agree with you.
And then what happens? So instead of me selling 1 million barrels a day at 118, I'll sell 600,000 barrels a day at 190 and make the same money and be underneath the threshold for the penalty. It will have an exact opposite effect on the market.
Exactly.
What you're talking about.
And Jeff, if they were to put basically a tax on oil for having too much profit, you would see them pushing to do the same thing to pharma. You know what I'm saying?
They did give a break on. They're trying to offer incentives for drilling. Jeff and I had this conversation I don't even know, not that long ago. I think I got cut off when we did, but yeah, I mean, they can do whatever they want, man. I mean, they can definitely tax oil. There's that, and if you don't think that'll affect the price, you're wrong, because it'll affect the price, right? Like it has.
Do you think they get that through Congress and get that through the Senate?
It's money, right?
I don't know. I mean, you can get 60 votes in the Senate to put a penalty tax on the oil industry for having too much profit? I don't think so.
Why wouldn't you be able to? I mean, to me, they shouldn't, but if you look at the oil industry, if I could finish, hang on, Jeff, I'm with you, man. The oil industry in general, if you follow if we're talking about everything, this is from real estate, now we're into oil, everything is kind of cyclical. So oil just does really, really bad, and they accumulate a ton of debt, and then oil out of nowhere is now doing fantastic, and now they're climbing, and the books are climbing. And how are they going to get back into debt? Well, they're going to get taxed, or everyone's going to say, we don't need oil anymore. So there's going to be something. I mean, that's just the way that the market heals itself. It's got, something like that could happen for sure. I mean, we can't assume anything, right?
But do you really think we can get 60 votes in the Senate to pass that? I'm not saying that some people wouldn't want to. Elizabeth Warren would, of course. AOC probably would.
You're assuming, though. How do we?
No, I'm just saying there is so much pushback I've ever seen through basically Senate votes that I would be very much surprised.
So you have a belief. You have a belief. If you believe that oil is worth a lot more, then that's where you're at. And if you are afraid of the Senate potentially, putting in some kind of a tax, then you'd be afraid of it. But that's the whole problem with investing in oil, right? It's just so geopolitical.
I'm not saying either thing. I'm just saying that I don't see that we are in an environment personally where they can get 60 votes out of the Senate to pass that. That's all.
And also, then the oil company could say, "Hey, also we're pumping oil, but we have solar panels on our oil rigs, so hey, we're great." And who knows, man? I mean, the whole industry is really fucked. But what it looks like to me is that it's booming now, and it's going to boom for a little while until it doesn't, right? And then it's going to tank. So you ride the wave, and we're on a wave. So ride it. That's where we're at. That's as simple as I could put it. If you look at the crack spreads, I don't know if anybody looks into that, but the crack spreads basically determine the price of oil about a month ahead of time, because that is the cost of what it takes to turn the oil into the crude oil into what the crude oil actually is. And when that cost is adjusted to, it's more expensive to turn oil into what you want it to be, the crude oil into what you want it to be, that cost, if it goes up, that's an important number for all of us to watch. And when that number starts to drop, that means that more and more businesses or companies or whatever are moving into the sector, and it's going to make a change. So that's the only number you can watch, I guess.
Yeah, but Fitz, just really fast. I mean, the biggest challenge right now with oil, for example, isn't drilling. It's distillation. It's the refineries.
Dude, do you know what the crack spreads are? That's what it is. That's what I'm talking about.
Right, exactly. And so there isn't the capacity online right now to do it. And so
so that's what I'm saying, man. Yeah, so the crack spread, it means that's what it takes to get the crude oil to turn it. You have to refine it into something. And when the crack spread is high, that means that basically it's costing more money to turn that crude oil, into whatever you want. Because it's great, you get oil. What the hell are you going to do with it? You got to do something with it, because we can create energy with it, but how? You know what I mean? It has to become some type of useful fuel. So if you to turn that into fuel, there's a price. Some of the guys that I follow, one of the dudes came up with, "Hey, look at the crack spreads," and it was one of the most informative, basically points on oil to determine these costs. And it was such a great outlook in terms of how the price is going to be affected. So you're correct. I think you're agreeing with me, Joe.
The other thing is, Fitz, the deep well drillers, and it takes 7 years, right, to do a new well. They've stopped, renting rigs, and they've stopped drilling. Okay, all they're doing is monetizing and creating dividends for their shareholders. They could, nobody's drilling. There's no more fracking, which is the lighter oil. So yeah, I think the price is destined to go higher. So 3 aces. I think he's correct. We have a lot of countries, even natural gas. All right, this Russian war has done enough, I think, to with all these sanctions to stop companies from making the investments they need to make. And this farce, this green energy bullshit, I think that set us back 5 years as far as I'm concerned.
Well, if you want to be sneaky, just keep an eye on the crack spreads. And if the crack spread, if it starts to get cheaper for the oil to get turned into whatever they want to use it for, then you'll know that the price of the oil will go down, because it's cheaper to turn it into whatever it needs to be turned into, and therefore, it makes perfect economic sense. So that's just the point for you guys.
Yeah, but first, what you're talking about, the crack spread is a canary of basically distillation capacity. So when you're seeing that price go up, that means that there's been a further constriction on capacity for distillation. So I'm not saying that people shouldn't look at that, but it's a canary of something else that's actually happening in the markets. That's all.
Yeah, no, I think we're kind of agreeing, but there's something to it. It's not something that you should not, and most people don't look at it, but it's not something that you should avoid looking at, because if you can imagine with the amount, just the price that it takes in order to turn that crude oil into whatever you need it to turn into, if that's a high price, it's going to affect the price of oil, right? So it's just kind of natural. That's all.
You're talking about, of course, Fritz, I'm not disagreeing with you. You're talking about a supply and demand thing. And as supply and demand, price goes up. When you have high demand, low supply. All I'm saying is that we are talking about can have multiple factors impacting it, but one impact is distillation capacity, refinery capacity. That's all, dude.
I just had a quick question, if you guys don't mind.
Yeah, go ahead.
I was listening to what Josh was saying about the sort of the historical stuff where sometimes we think this stuff is going to crash down and then bounce back, but sometimes it can take 7, 8 months, 12 months, whatever, 2 years after 2000. And I just want to say that the valuation of like oil and Canadian oil is amazing, but I'm wondering, like, I'm sort of like maybe beginner to intermediate investor, and I'm wondering if it's possible to see sort of economic recession and rising oil at the same time. I'm not long anything anymore. I was long Canadian oil companies a couple months ago. Now I think everything has to come down from what I've been reading, including them, and then we'll go back up. But I'm just wondering if people have wondered about the correlations we've seen in the past, like not holding up now because so many things have happened, if that makes any sense.
Let me add a couple of points, guys. Those who are investors, those who are new into this market, right? Because everybody has to understand there is. So when it comes to talking about oil, right? So somebody comes to you and say, hey, the loaf of bread is probably cost you like $5, and comes in and says, no, now it's going to be $50. How do you feel about it? Maybe you may pay 1 time, 2 times, but then it's going to be $50 all time, right? So same thing, oil. So when oil is just the energy, that's the main source of energy. Everybody needs that oil to go to the work. Imagine if that oil tank, somebody filled up a truck today, our community, and said he paid $250 just to drive from LA to wherever his work is. If $250 somebody has to pay every day, how much money he has to make? Just do your math work. And somebody is telling me in the community that the oil gonna go to it's gonna go to maybe double. They say double, triple, like that. Okay, in that case, if that happens, what would happen to all the politicians? That's what I forget about. What would happen to us? Because for us, we can't even go to work because this is like another pandemic level, because you can't go to work because you had a corona around everywhere. So now you can go to work because the gas prices tripled, 2 times, 3 times, right? So people can't go to work because they have to work from home because the gas price has gone up, right? Because the company can't afford, because their EPS is going down. Company's EPS is going down. Their P ratio.
I totally get it, Josh. I'm just saying, does anyone think that maybe we'll see something we've never seen before, where actually oil goes up while economic activity goes down?
That's already where we are at.
We were in opposite in 2008, though.
We're already there.
All right, well,
we have GDP going down.
I don't mean to be like dumb or.
I think the thing is that when you're looking at, if Josh is talking about sectors or stocks turning around, it's going to be very specific. You had a lot of companies that spiked out last summer that didn't have a lot of fundamental scrutiny. And Josh would agree with that, I think. And so a lot of companies spiked up in price, didn't get a lot of scrutiny. They're kind of riding a wave of enthusiasm. And a lot of those companies that were up on enthusiasm but not technicals probably will never hit those highs again in most cases. Some companies were doing really well and they looked okay on paper, but people didn't look at what would happen if certain things changed in the economy. A great example would be Upstart, UPST.
I have some shorts on Upstart, just full disclosure.
No problem. But Upstart, basically, its model didn't take into account increased rates of loans, and because of that, the model doesn't work. And so that's one of the reasons why their stock price has gone into the shitter. People realize that this product doesn't work when you have increased interest rates.
Right.
So it's really specific about if you want to go into a long investment, what you're looking at. I mean, if I was to give,
I guess I totally understand everything you're saying, but I guess my challenge is that my macro is the same as far as energy and oil and basically Canada oil, but my macro has changed as far as I think over the coming maybe 6 weeks, I think everything needs to come down, and I don't think that will be fair to the Canadian oil companies. And if you know where I'm going, right? Like,
Josh, you mind if I just jump in here real quick?
Go ahead.
All right. So, Dan, all commodities from oil to coal, gold, silver, lumber, cobalt, nickel, copper.
Morning, everyone.
Let's forget about sugar. Tucker Carlson's from the Sugar Baron family.
Okay.
It's a bit of trivia.
All right. I'm trying to help you here. Okay.
Sorry.
So, that's okay. So now...
I'm trying to be entertaining.
So, all commodities are priced in dollars. If you go to the London Metal Exchange, right, which is in London, all the prices, cobalt, nickel, zinc, copper, all of them, are priced in U.S. dollars.
I feel like you're condescending me or tugging down on me or something.
I'm just stating a fact here. These are facts. So...
But I feel like there are facts that maybe people know.
Oh, sorry. The London Exchange and London location. That was funny. I'm sorry, Aces.
Well, no, but I mean the exchange is in London, but the prices are dollars. Right, because all commodities are priced in dollars. So
now we're going into the dollar versus something on the global stage.
Bro, okay, I'm gonna try this. I'm gonna try this one last time. If I can get a full sentence out.
Okay, sorry.
All right, thank you. So, what that means is the single biggest contributor to the price of a commodity, such as copper, oil, gold, silver, cobalt, nickel, zinc. The single biggest factor is the price of the dollar. Right. So when the dollar's going up against a basket of other currencies, like the DXY, for example, it takes fewer dollars to buy a barrel of oil.
Right.
When the dollar's going down, it takes more dollars to buy a barrel of oil. So the single biggest factor to the price of all commodities is the direction of the dollar. Now, if you go back and look over the last 25 years, the huge spikes up in oil were when the dollar was getting killed, and vice versa. What we've had here in the past 9 months, a year, we've had the dollar index go from 90 to 105, which is a major move up.
Okay.
But for the first time in history, so did oil. Oil went up in the face of a strong dollar. It is unprecedented.
Okay, well, I thank you for being patient with me, because that's what I was asking, was these correlations have broken down and things are changing.
They have, right. And here's the real issue. The issue with that is that the emerging markets, the Sri Lankas, you're starting to see now countries all across the world.
Yeah, that was brutal.
Right. Well, the reason why is because not only are they paying huge premiums for oil in local currencies, but their currencies are getting smoked also. So they're getting absolutely creamed. And then to add an insult to injury on top of it all, ESG has now taken the price of fertilizers.
Don't get me started on that. Sure.
Right. So these
have you guys heard about the anti-ESG? Who created the anti-ESG?
I don't want to just squeeze in here.
I'm going to shut up now. I got to stop, dude. Thank you for answering my question. I was asking if other correlations were going to break down.
Well, I think, Dan, what we're talking about, and ACES is talking about, is the fact that you have some countries, some localities of the world that, of course, now can't afford to buy dollars, to buy basically whatever commodity they need.
They can't afford the economy. They can't afford the commodities.
Correct. That's what I'm saying.
Right. Not buying dollars. They can't afford the commodities.
They can't afford. They can't get the credit they need to buy the commodities where they are. That's like Sri Lanka. That's one of the countries that's over by Israel. Has the same problem. They just couldn't afford basically to buy the wheat imports and their food imports. But what I was going to try and get at, just really fast, Dan, is that. Well, it's always, you're talking about usually like a supply and demand, but what we're also looking at basically is when does a commodity hit a demand destruction? Because basically it's just gotten too expensive, and we've seen that with fertilizer. Fertilizer's pulled back because people just can't afford it, and so demand's gone down. The big question that comes up is when the hell will that happen to oil? And that's a big unknown.
Well, I guess what I'm saying is maybe things have changed, because what I've been reading and listening to is that a lot of people think that the dollar is going down and China's on the rise and all this stuff, and that's what I've been hearing for 20 years. And now I'm starting to read things that kind of say that might not be true. And so what I'm wondering is if it's possible for the dollar to go up and oil go up, and things that we've never seen before,
the reason why that's happening is because of this artificial attack on the producers. There has been a full-on world war by the United States government.
No, totally, but that's what's led to this, and that's what's got us here.
Right, but that's a supply and demand thing.
I'm just saying we might be in territory where, I don't know, it would be weird if you went into a recession and you saw $150 oil. People are that's impossible. Well, everyone thinks everything's impossible until...
You may see $250 oil.
Yeah, but I'm saying that our old models are well, that can't happen if blah, blah, blah happens.
Well, if everything's constant, but everything's not constant. For the first time
I know.
in history,
I'm agreeing with you.
We've got a World War III waged against an industry for absolutely no reason other than politics.
Yeah, I hate those fuckers.
So Dan,
I've owned. The United States is the only place where you can own oil royalties, where you can actually lease your land to an oil company, and that's one of the good things we have going on here.
It's called personal property rights. United States is the only country in the world.
I'll just add this before I hang up. A lot of people don't know that California, here where I live in Northern California, not some kind of whatever you call it, but we have a great Kern County oil field, and it's a fantastic place. It's the 5th most productive region, I think, in the country or the world, and we're not going to stop. All right, I love you guys.
All right, guys. I think it's 12 o'clock here up here in East Coast, and I gotta go. It's been 6 hours live, but I appreciate for your time, guys. 3ACs, Joseph, everybody. I really appreciate being here. We'll be live here tomorrow morning. Don't like to be rude here, but please, man, I appreciate your time, and I need to get going. I need to sleep tomorrow live 10 hours.
Josh, have a great night tonight.
All right, you too, man. Thank you, guys.
No problem, bro.
See you, man, tomorrow. Bye, guys.